Hello my dear students. Now in the booster series of lectures, let us start with the next chapter, TDS and TCS. Whatever the material that I am going to teach you right now, the same material is available in our Telegram channel. You can access the material, take printout and start studying the chapter. Many students are finding TDS and TCS as very complex. My dear friends, TDS and TCS is not complex. The only thing that is required is you need to revise this chapter for 3 to 4 times. Then it becomes very easy for you. So I will simplify all the provisions for you. Listen to this lecture, listen to 3 times. Obviously, it will be simplified for you. That's the only solution. Listen it multiple times, start doing the problems and then go to the examination. Okay. So easily from TDS and TCS chapter, you can expect 4 to 6 marks. Definitely one question will come, and that too last question. That much important this chapter is, don't skip this chapter. Not only for examination, even if you go to interviews after clearing CA Inter for articles, in those interviews also TDS and TCS regarding questions will be asked. Now first let us start with section 192. Under section 192, who is required to deduct TDS? Employer is required to deduct TDS, and payee can be any individual whether he is resident or non-resident. If the amount of salary is up to basic exemption limit, no TDS is required to be deducted by employer. For example, employee salary is 20,000 per month. 20,000 into 12, 2,40,000. It is less than basic exemption limit. Employer is not required to deduct TDS on 2,40,000. Is it clear? So only if salary is greater than basic exemption limit, then only TDS is required to be deducted. What is the rate of TDS? Average rate of income tax computed on the basis of rates in force. When TDS is required to be deducted? At the time of payment. Employer did not pay salary, but employer claimed expenditure on accrual basis. Employer is not required to deduct TDS. Only when salary is actually paid to employee, then only TDS is required to be deducted. Now, sir, how TDS will be deducted? First, employer will calculate total income of the employee and employer will calculate the tax liability of the employee. While calculating total income, if there are any exempted allowances, employer will claim exemption. And see, employer know salary details. So employer will calculate the total salary of employee, but employer does not know other incomes of employee. So employer can ask employee to provide information about other incomes. Employee can give his business income, other sources income and house property income to the employer. Those particulars will also be considered by employer in calculation of TDS. Sir, whether employee can give losses? Yes, employee can give losses, but only house property loss can be considered by employer while calculation of tax liability for the purpose of deducting TDS. Next, generally, employer will calculate tax liability under default tax rates for deducting TDS. If employee gives intimation to the employer, then employer will deduct TDS under optional tax rates. So whenever employee gives intimation with regard to paying of taxes under optional tax rates, then this particular information is also required to be given by employee. For example, employee is claiming HRA exemption. Then like employee has to give PAN number of the landlord. See, if employee is paying rent of more than 1 lakh, sometimes it is being asked in MCQs. Please remember, whenever employee is claiming HRA exemption and rent paid by employee to the landlord is more than 1 lakh, so employee has to give the PAN number of the landlord to the employer. So employer will calculate HRA exemption and employer will calculate total income accordingly. Okay. Next, if employee is claiming leave travel concession or assistance, then for that leave travel expense, leave travel concession, whatever the travel bills are their expenditure, that information is also required to be given by employee to the employer. If employee is claiming loss under the head house property, interest on house property, borrowed capital, so he has to give the name of the lender and PAN of the lender. For example, employee took housing loan from ICICI Bank. So he has to give details of ICICI Bank along with ICICI Bank PAN number. So if employee is claiming Chapter 6A deductions, ATC, ATD investments, evidence of those investments, insurance premium bill, okay, like medical expenditure bill, all those proofs are required to be submitted by employee to the employer. Only if all these proofs are submitted, then only employer will calculate the total income by claiming all these deductions. Once employer calculates total income, then employer will calculate the tax liability. Whatever the tax liability of employee is there, that will be divided into 12 months, and every month the tax liability amount will be deducted in the form of TDS. Is it clear? Are you able to understand? So generally, employer will calculate TDS under default tax rates. If employee gives intimation, then employer will calculate TDS under optional tax rates. So this is the TDS section 192. Next, another important point. In the middle of the year, employee shifts from employer 1 to employer 2. That means what? For example, employee is working in Infosys. He shifted to Tech Mahindra. So whenever employee shifts from Infosys to Tech Mahindra, in form number 12B, employee has to give information of Infosys with Tech Mahindra. That means in form number 12B, let's say after 8 months employee shifted from Infosys to Tech Mahindra. During these 8 months, salary received from Infosys, TDS deducted by Infosys, all these particulars are to be noted down in form number 12B, and that form number 12B will be submitted to Tech Mahindra. So Tech Mahindra in the 9th month, when it is paying salary, it will consider salary given by Infosys and it will consider TDS deducted by Infosys. Considering that information, Tech Mahindra will calculate tax liability and deduct TDS in the 9th month. So whenever employee shifts from old employer to new employer, information of salary information of old employer should be shared with new employer in form number 12B. So new employer will consider all that information and deduct TDS accordingly. Is it clear? Next, section 192A, premature withdrawal from employees provident fund. This concept we have studied under the head income from salaries. So whenever you withdraw amount from recognized provident fund after completion of 5 years, it is not taxable. If withdrawal from recognized provident fund is not taxable, there is no point, correct? So whenever income is not taxable, whenever income is exempt, okay, in such case TDS is not required to be deducted. So after completion of 5 years of service, if you are withdrawing amount from recognized provident fund, it is not taxable, so no TDS is required to be deducted. Before completion of 5 years, you are withdrawing the amount. If you are withdrawing because of ill health of the employee or closure of business by employer or any reason beyond the control of employee, for these 3 reasons, if amount is withdrawn from recognized provident fund before completion of 5 years, then also such income is not taxable. When income is not taxable, TDS is not required to be deducted. And whenever employee shifts from one organization to another organization, let's say for 3 years employee worked with Infosys and he shifted to Tech Mahindra. When he shifted to Tech Mahindra, he transferred recognized provident fund account from Infosys is transferred to Tech Mahindra. And in Tech Mahindra, he worked for 3 years. Now 3 years plus 3 years, 6 years. It is greater than 5 years. So whenever employee shifts from one organization to another organization, and if there is transfer of recognized provident fund account from old employer to new employer, then cumulatively we will calculate the period of 5 years. So with both the organization, if he finishes more than 5 years, we will consider as he has completed 5 years of service, and in such case also no TDS is required to be deducted. So whenever withdrawal from recognized provident fund is not taxable, in such case whatever the amount that is withdrawn on that amount, no TDS is required to be deducted. Only if withdrawal from recognized provident fund is taxable, then only TDS is required to be deducted under section 192A. Are you able to understand? So what is the threshold limit? 50,000 rupees, less than 50,000. So if amount withdrawn from recognized provident fund, taxable amount withdrawn, very important. taxable amount withdrawn, because if it is exempt, then there is no point, not required to deduct TDS. So if taxable amount withdrawn is greater than or equal to 50,000, then TDS is required to be deducted under section 192A. Is it clear? So if it is less than 50,000, that means up to 49,999, no TDS will be deducted. Even if it is 50,000 withdrawal amount, TDS will be deducted. So if withdrawal amount is 50,000 or greater than 50,000, then TDS is required to be deducted. Is it clear? Who will deduct TDS? EPF organization will deduct TDS. What is the rate of TDS? 10% TDS will be deducted. When it will be deducted? At the time of payment. Is it clear? So this is about section 192A. Next, section 193, interest on securities. See, on securities interest will be paid, right? On such interest, TDS is required to be deducted under section 193. So any person who is paying interest, he is required to deduct TDS on securities. Only if payment is made to resident, then only TDS is required to be deducted under section 193. If payment is made to non-resident, 195 is there. Okay, so interest on securities, let's say I purchased debentures. On those debentures, interest 40,000 interest is paid to me. Before company pays 40,000 interest to me, company is required to deduct TDS under section 193 at the rate of 10%. Sir, when TDS is required to be deducted? Accrual basis or cash basis, whichever is earlier. For example, in the month of March, company did not pay TDS to me, but company did not pay interest to me. Company announced interest will be paid. On 31st March, it passed accrual entry. Interest is paid to Umasankar. Okay, interest expenditure to amount payable to Umasankar. That entry was written. That means it is like on accrual basis, credit entry was passed in books of accounts. On 4th April, interest is paid to me. Now 31st March or 4th April, out of these two dates, whichever is earlier, means on 31st March, TDS is required to be deducted. That means the date on which organization recognizes interest on accrual basis or the date on which organization actually pays interest on securities. Out of these two dates, whichever is earlier is there, on that date TDS is required to be deducted. Are you able to understand? So in case of interest on securities, payer can be any person, but payer should be resident in India. Rate of TDS is 10%. When TDS is required to be deducted? Like date of credit entry in books of accounts or date of payment, whichever is earlier. These note points are very much important. In case of section 193, no TDS if interest is paid to individual or HUF on debentures issued by a public company where interest does not exceed 5,000 during the previous year and paid by account payee check. This is a bit appearing complex to you, but listen to me, I will simplify. When TDS is not required to be deducted, if interest is paid to individual or HUF. Condition 1 is individual or HUF. Sir, every interest made to individual or HUF is not required to deduct TDS? No, that's not correct. Interest is not, TDS is not required on payment of interest to individual or HUF on debentures issued by public company. So this is condition 2. So on public company issued debentures, if any interest is paid, okay, if such interest is paid to individual or HUF, TDS is not required to be deducted. Condition 2. Third condition, interest amount should not exceed 5,000. That is condition 3. And such interest should be paid by way of account payee check. Fourth condition. If all these 4 conditions are satisfied, TDS is not required to be deducted. What are 4 conditions? Like interest should be paid to individual or HUF. On what? On bonds issued by, on public company issued debentures. Up to what amount? If the amount of interest is up to 5,000, no TDS is required to be deducted, and such interest should be paid by way of bank transaction. If all these 4 conditions are satisfied, interest paid to individual or HUF on bonds issued by, on public company issued debentures, amount of interest is less than 5,000 and it is paid by way of bank transaction. Conjunction is and. All the 4 conditions are required to be satisfied, then whatever the interest paid to individual or HUF is there, on such interest no TDS is required to be deducted. Next, if interest is paid to LIC, GIC or any other insurer, see LIC it takes money from us, premium amount. It will invest that amount in debentures of various companies or securities of various companies. So those companies will pay interest to LIC. If any interest is paid to LIC, very simple, if payee, if recipient of interest is either LIC or GIC or any other insurance company, TDS is not required to be deducted. Special exemption is given from TDS. So if the recipient of interest on securities is either LIC or GIC or any other insurance company, TDS is not required to be deducted. Similarly, on 7-year national savings certificates, if any interest is paid, no TDS is required to be deducted. Next, on national development bonds, if any interest is paid, TDS is not required to be deducted. Do you remember 54 EC? I have discussed in capital gains chapter, like reinvestment should be made in RECL bonds, NHAI bonds, or Power Finance Corporation bonds, or Indian Railway Finance Corporation Limited bonds. Do you remember? So if interest is paid on Power Finance Corporation Limited bonds or Indian Railway Finance Corporation Limited bonds, no TDS is required to be deducted. So like let's say I sold gold, whatever the amount that I received, like I invested that amount in purchase of new let's say I sold immovable property. On sale of immovable property, what is combination under 54 EC? Immovable property to NHAI bonds or RECL bonds. So I sold a land, I got money. This money I invested in Indian Railway Finance Corporation Limited bonds. I invested 10 lakh rupees. Every year I will get interest of 80,000 rupees. Indian Railway Finance Corporation Limited, it will directly pay 80,000 rupees to me without any deduction of TDS, because if any interest is paid on Power Finance Corporation Limited bonds or Indian Railway Finance Corporation Limited bonds, on such interest no TDS is required to be deducted. Is it clear? Next, if generally if government securities are issued, on government securities interest will be paid by government. On such interest it is not required to deduct TDS. So generally on government securities, whatever the interest is paid, on such interest TDS is not required to be deducted except 3 bonds. That means for these 3 bonds, even though they are government securities, still TDS is required to be deducted. What are those bonds? Interest on 8% savings taxable bonds 2003 or interest on 7.75% savings taxable bonds 2018 with effect from 1st October 2024. This is a new amendment. Floating rate savings bonds 2020. On these bonds, if any interest is paid, TDS is required to be deducted. But if the interest amount is less than or equal to 10,000, no TDS is required. If interest is greater than 10,000, then TDS is required to be deducted. I will simplify. Listen. On government securities, interest paid, no TDS is required to be deducted except in 3 situations. That means in these 3 situations, even though they are government securities, still on interest TDS is required to be deducted only if interest amount is greater than 10,000 rupees. That means on 8% savings taxable bonds, 7.75% savings taxable bonds. From 1st October 24 onwards, if any interest is paid on floating rate savings bonds 2020, on these 3 bonds, if interest amount is greater than 10,000 rupees, then TDS is required to be deducted even though they are government securities. Is it clear? So let me quickly summarize section 193. On interest on securities, TDS is required to be deducted under section 193. Any person who is paying interest is required to deduct TDS. Payee should be resident in India. Rate of TDS 10%. When TDS, accrual basis or cash basis, whichever is earlier. But in case of individual and HUF, if interest is paid on debentures issued by public company and if amount of interest is less than 5,000 and if such interest is paid by account payee check, no TDS under section 193. Is it clear? Next, if recipient of interest is LIC, GIC, any other insurance company, no TDS under section 193. On 7 years national savings certificates, national development bonds, 54 EC bonds, Power Finance Corporation Limited bonds, RECL bonds. If any interest is paid, no TDS is required to be deducted. On government securities also, on interest, TDS is not required to be deducted except three securities. Even on these three securities also, only if interest amount is more than 10,000, then only TDS is required to be deducted. What are those three? 8% savings taxable bonds, like 7.75% savings taxable bonds, floating rate savings bonds 2020 with effect from 1st October 2024. So on these three bonds, if interest amount is greater than 10,000, then TDS is required to be deducted. Is it clear? Now let us discuss section 194. On payment of dividend, TDS is required to be deducted under section 194. If what is the threshold limit? If dividend is paid to individual by any mode other than cash in a previous year. Let's say I deposited 20,000 rupees in Reliance Limited. I got a dividend of 2,000 rupees. I am an individual. Reliance Limited is paying dividend to me by way of bank transaction, and amount of dividend is 2,000, which is less than 5,000. TDS is not required to be deducted. Is it clear? So if amount of dividend paid to individual is less than 5,000 and such dividend is paid by way of bank transaction, TDS is not required to be deducted. In remaining all cases, there is no threshold limit. When payment of dividend, TDS is required to be deducted. Who will deduct TDS? Company will deduct TDS. When only if dividend is paid to resident shareholder, then only section 194 gets attracted. If dividend is paid to non-resident, 194 will not get attracted. 194 under section 194, TDS is required to be deducted only if dividend is paid to resident shareholder. What is rate of TDS? 10%. When TDS is required to be deducted? At the time of payment. But if dividend is paid to LIC, GIC or any other insurer, no TDS is required to be deducted. Very simple. On 194, TDS is required to be deducted when paying dividend. If dividend is paid to individual by bank transaction and such dividend is less than 5,000, no TDS. In remaining all cases, TDS is required to be deducted. Rate of TDS is 10%. When TDS is required to be deducted? At the time of payment only. When TDS is paid to when dividend is paid to LIC, GIC or any other insurance company, no TDS is required to be deducted. Is it clear? Next. Section 194A, interest other than interest on securities. See, on securities, bonds, debentures, okay. On securities, if any interest is paid, section 193 gets attracted. Other than on securities, if any interest is paid, then TDS is required to be deducted under section 194A. Let's say I deposited 2 lakhs in a fixed deposit. Whether fixed deposit is a security? No, right? So on fixed deposit, if any interest is paid to me, on such interest, TDS is required to be deducted under section 194A. Now, threshold limits. Threshold limit means what? Up to that amount, no TDS is required. If the amount of payment is more than threshold limit, then only TDS is required to be deducted. Now let us see. If interest on fixed deposit or recurring deposit is paid by bank, post office or cooperative bank, and if amount of interest is up to 40,000 rupees, no TDS is required to be deducted. Who is the payer? Either bank or post office or cooperative society engaged in banking business. If these category of payers, if they pay interest to individual, then if the amount of interest is up to 40,000 rupees, no TDS is required to be deducted. If interest is paid to senior citizen or very senior citizen, then threshold limit is 50,000 rupees. That means bank is paying interest on fixed deposit to senior citizen. If the amount of interest is up to 50,000, no TDS is required to be deducted. If the amount of interest paid is more than 50,000 for senior citizen by a bank, then bank is required to deduct TDS. Is it clear? Next. See, only for fixed deposit, recurring deposit paid by bank, post office, cooperative bank, threshold limit of 40,000 or 50,000 is applicable. If interest is paid by any other person or in other cases, threshold limit is 5,000. If the amount of interest paid is 5,000, no TDS is required to be deducted. Otherwise, TDS is required to be deducted. Here, small clarification. See, if bank is not having core banking solution software, CBS software, let's say Tamil Nadu Cooperative Bank is there. For example, that bank is not having CBS software. then threshold limit of 40,000 or 50,000 is calculated per branch. Let's say in Tamil Nadu Cooperative Bank, I have two accounts, one in Madurai, another in Tamil Nadu. It is not having CBS software, right? So 40,000 limit I will get for Madurai FD and 40,000 limit I will get separately for Chennai FD. Are you able to understand? So if bank is having core banking solution software, then all branches together, if amount of interest is more than 40,000 or 50,000, then TDS is required to be deducted. That means 40,000 limit or 50,000 limit is to be reckoned, is to be calculated per branch if CBS software is not there. If CBS software is there, means 40,000 or 50,000 limit is to be calculated for all branches together. Is it clear? Next. So payer any person except individual or HUF. That means what? See, there is chair definition 194C, 194H, 194A, 194I, 194R. So CHAIR, chair. So for under these sections, if payer is other than individual or HUF, payer other than individual or HUF, then TDS required to be deducted. TDS required to be deducted if payment is greater than threshold limit. Under these sections, chair sections, if payer is individual or HUF, then we have to check. In case of individual or HUF, in preceding financial year, in business, if turnover is less than or equal to 1 crore. In profession, if gross receipts are less than or equal to 50 lakhs, no TDS. They are not required to deduct TDS. In preceding financial year, in business, if turnover is more than 1 crore, in profession, if gross receipts are more than 50 lakhs, then TDS is required to be deducted if payment crosses threshold limit. Very simple as that. 5 sections. What are they? 194C, H, A, I, R, chair. Okay. Under these sections, if payer is other than individual or HUF, then payer is mandatorily required to deduct TDS if payment crosses threshold limit. If payer is individual or HUF, careful. Please check for that individual or HUF turnover in preceding financial year. In preceding financial year, if business turnover is less than or equal to 1 crore, in profession, in preceding financial year, gross receipts are less than or equal to 50 lakhs, no TDS is required to be deducted by payer. If payer is individual or HUF, and in preceding financial year, if business turnover is more than 1 crore, or in profession, if gross receipts are more than 50 lakhs, then such individual or HUF is required to deduct TDS if payment crosses threshold limit. Is it clear? Next. Payee should be resident in India as per section 194A. That means other than on securities, only if interest is paid to resident, then only TDS is required to be deducted under section 194A. What is the rate of TDS? Rate of TDS is 10%. When TDS is required to be deducted, accrual or cash basis. That means the date on which interest expenditure is recorded in books of accounts, or on the date of interest payment. Out of these two dates, whichever is earlier is there, on that earlier date TDS is required to be deducted. Is it clear? Next. On income tax refund, generally if refund amount is paid lately by income tax department will pay interest on income tax refund. Interest on income tax refund, TDS is not required to be deducted. See, income tax department, it has written rule very safely. When it is paying interest, it is not required to deduct TDS. When others are paying interest, they are required to deduct TDS. Okay, because there is no compliance burden on income tax department. So whenever income tax department is paying interest on income tax refund, income tax department is not required to deduct TDS. Interest on bank savings account. So on bank savings account, if any interest is received, I deposited 50 lakhs, I received interest of 5 lakhs, no TDS. When interest is received on savings account, TDS will not be deducted. Interest paid by any bank or cooperative banks, or interest paid to, that means whenever, see, in between banks also there will be deposits, right? So when one bank pays interest to another bank, on such interest TDS is not required to be deducted. That means recipient of interest, those who are receiving interest, okay, if recipient of interest is bank or cooperative bank, LIC, UTI, any insurance company, National Skill Development Fund, Housing and Urban Development Corporation, so if these persons receive any interest, TDS is not required to be deducted. So when interest is paid to bank or cooperative bank, LIC, UTI, any other insurer, National Skill Development Fund, for these category of persons, if interest is paid other than on securities, no TDS is required to be deducted under section 194A. Is it clear? Next, interest paid by cooperative society other than cooperative bank to its members or to any other cooperative society. That means what? Cooperative society is there. Cooperative society, like it is paying interest to another cooperative society. Or it is paying interest to its own members. So in these two cases, cooperative society is not required to deduct TDS. Is it clear? Next, interest on zero coupon bonds. Infrastructure debt company, it will issue zero coupon bonds. On zero coupon bonds, there will be discount, right? So at the time of redemption of zero coupon bonds, they will get face value. So whatever the discount amount is there, on the discount amount, TDS is not required to be deducted under section 194A. Interest paid by cooperative bank to another cooperative society. My dear friends, listen carefully. Here I said cooperative society. Here I am saying about cooperative bank. Both are not cooperative societies. Fourth point is discussing about cooperative society. Under fourth point, payer is cooperative society. Under sixth point, payer is cooperative bank. So if cooperative bank pays interest to another cooperative society, so cooperative bank, it pays interest to another cooperative society. Okay, on this interest, no TDS is required to be deducted. Is it clear? Are you able to understand? Next, interest paid or created by partnership firm to its partners. Whenever partnership firm pays interest to its partners, on such interest, TDS is not required to be deducted under section 194A. Interest credited on compensation amount awarded by Motor Accidents Claim Tribunal. Interest on compensation awarded by Motor Accidents Claims Tribunal paid during financial year does not exceed 5,000. Sir, 8th point and 9th point both are looking similar. What is the difference? 8th point credited, 9th point paid. So whenever interest is created by motor tribunal, okay, motor accidents claim tribunal, at the time of credit it is not required to deduct TDS, only at the time of payment. That means whenever compensation is paid by motor accidents claim tribunal, then only TDS is required to be deducted. That too, if the compensation amount is up to 50,000 in a financial year. If compensation paid in a financial year is up to 50,000 rupees, motor accidents claim tribunal is not required to deduct TDS. However, if the compensation paid in financial year is more than 50,000 rupees, then it is required to deduct TDS. Next, provisions of section 194A do not apply to fixed deposit made in the name of Registrar General of Court. Sometimes there are cases that are pending in the court. Court will give, like whenever case is going on during the pendency of courts, court will order money to be deposited in the name of the court. So whenever money is deposited in the name of the court, and on such money, if any interest is paid, no TDS is required to be deducted. Next, in case of minor, both the parents are died and interest is paid to minor. In such a case, TDS is required to be deducted in the name of the minor only, unless like any declaration is given in the name of any other person. Mr. A is there. he is a minor, 12 years old. His parents died. However, he has a FD 10 lakh rupees. On that FD, he gets interest. So when both parents are not there, TDS will be deducted in the name of minor only, unless under, like as per rule 37BA2, if any declaration is given that TDS is required to be deducted on the name of the guardian, then TDS will be deducted in the name of another person being guardian. Okay. Next, capital gains account scheme, right? We have discussed, to claim exemption, you need to deposit money in capital gains account scheme. So if any interest is paid on money deposited under capital gains account scheme, then TDS is required to be deducted under section 194A. For example, Mr. A deposited money in capital gains account scheme. After depositing, in next 4 months, Mr. A died. So up to the date of death of the Mr. A, whatever the interest is there, on such interest TDS will be deducted in the name of Mr. A. After the death of Mr. A, whatever the interest amount that is paid is there, on such interest amount TDS will be deducted in the name of the legal heir. So in case of capital gains account scheme, if any interest is paid up to the date of death of that person, interest will be deducted in the name of that person only. After the death of the person, interest amount will be, like on payment of interest, TDS will be deducted in the name of the legal heir. Okay. So this is all about 194A, very important. So questions can be asked, prepare very carefully. Next, section 194B. 115BB, right? Winnings from online games, winning from betting, gambling, horse races, all these. So on these amounts, before paying such amount, TDS is required to be deducted under section 194B. Other than horse races and other than online gaming, because for horse races, TDS is required to be deducted under section 194BB, and online gaming TDS is required to be deducted under section 194BA. So other than winning from horse races, other than net winnings from online gaming, on remaining all winnings, game shows, crossword puzzles. So on all these amounts, before, if the amount is up to 10,000 rupees, less than 10,000 rupees or equal to 10,000 rupees in a financial year, then no TDS is required to be deducted. However, if the amount of winning is greater than 10,000 rupees, then TDS is required to be deducted under section 194B. I am playing casino. I earned 6,000 rupees. It is less than 10,000. He will not deduct TDS. I earned 14,000 rupees. It is greater than 10,000 rupees. Before paying 14,000 rupees to me, he will deduct TDS at the rate of 30%. So under section 194B, winnings other than horse races and other than net winning from online gaming. Other than these two, if any winning amount is paid, then you have to check threshold limit. If the amount of winning paid is less than 10,000, if the amount of winning is less than or equal to 10,000, no TDS. If the amount of winning is greater than 10,000, TDS is required to be deducted. Payer can be any person, payee can be any person. That means resident or non-resident. That means even winnings are paid to non-resident, TDS is required to be deducted under section 194B. Rate of TDS is 30%. TDS is required to be deducted at the time of payment. Now, let's say in a casino, I won 80,000 rupees. He told 80,000 rupees will be paid over 6 installments or over 5 installments. 80,000 divided by 5, how much? I think 14,000. Sorry, 16,000. So every month he will pay me 16,000 rupees for next 5 months. So on the 16,000 rupees, TDS is required to be deducted at the rate of 30%. That means when winning amount is paid in installments, TDS is also required to be deducted for each installment at the rate of 30%. Is it clear? Next, I won 80,000 rupees. Out of 80,000 rupees, voluntarily I gave 20,000 rupees to government. That means I foregone the winning amount. Whenever winning amount is foregone, on such amount TDS is not required to be deducted. I won 80,000 rupees. Out of 80,000 rupees, 20,000 is foregone to government. Then you have to exclude 20,000 rupees, 80,000 minus 20,000, balance on 60,000 rupees only, TDS is required to be deducted under section 194B. Is it clear? Next, if winnings are in the form of kind, let's say I participated in a game show, I won a car. Okay, so whenever winning is in the form of kind, like payer should ensure TDS is paid on that kind before releasing that kind to me. That means what? I won a car. So before giving that car to me, the payer, whoever the game show organizer is there, he has to ensure TDS is paid on that car. Let's say car value is 15 lakh rupees. Now I have to go to income tax department, or I have to pay 30% TDS. 15 lakhs into 30%, 4 lakh 50,000 rupees. I have to make TDS payment to the government. I have to produce this challan to the game show organizer. Only after ensuring that I paid 4,50,000 rupees, he will give car to me. That means whenever winnings are given in the form of kind, payer has to ensure that TDS on that winning is properly paid to the government. Only after payment of TDS, then only he should release winnings to the payee. Is it clear? Next. 194 BA, winnings from net winnings from online gaming, not winnings, net winnings. So these days after COVID, like many people are playing online games and they are making money out of it. That's why if there are any net winnings from online gaming, then before payment of those net winnings, TDS is required to be deducted under section 194 BA by the online gaming platform. So whoever is conducting online gaming, before those online platform persons, before they pay winnings to the winners, they have to ensure TDS is deducted under section 194 BA. Payer can be any person, payee can be any person, whether resident or non-resident. Rate of TDS is 30%. Sir, when TDS is required to be deducted? TDS is required to be deducted at the time of withdrawal. See, I am playing casino. Let's say online gaming, online casino I am playing. In my account 10,000 rupees is deposited. TDS will not be deducted. Only when I withdraw, then only TDS will be deducted. Another point, under 194B, 10,000 rupees threshold limit is there. For net winnings from online gaming, there is no threshold limit. Even if I won 500 rupees and withdraw 500 rupees, on that 500 rupees TDS will be deducted under section 194BA. Is it clear? So when TDS will be deducted? At the time of withdrawal. Sir, in this financial year, I won 70,000 rupees, but I did not withdraw. So, like during the previous year, if there is no withdrawal, in such a case, TDS will be deducted at the end of the financial year on balance available on the user account. So, at the end of the financial year, in my user account, 70,000 rupees is available. Okay, on that 70,000 rupees, TDS will be deducted. Is it clear? Now, like there is some relaxation. If the amount of withdrawal is less than 100 rupees in a month, then no TDS will be deducted under section 194 BA. However, in the same month or in subsequent month, if the amount of withdrawal, if the amount of all withdrawals is greater than 100 rupees, then TDS is required to be deducted. Is it clear? So, like in a month, I am withdrawing, like in 1 month, I have withdrawn less than 100 rupees. He will not deduct TDS. In the same month, I have withdrawn second time. First time withdrawal, second time withdrawal. Together, it is greater than 100 rupees. Or in subsequent month, I have withdrawn. So if the amount of all withdrawals, if it is greater than 100 rupees, at that time he will deduct TDS. I am silent. Whole previous year, I did not withdraw amount. Then at the end of the financial year, he will deduct TDS. Somehow he will deduct TDS before the end of the previous year, whether you withdraw or not. If you withdraw, at the time of withdrawal, he will deduct TDS. If you do not withdraw, at the end of the financial year, whatever the balance available in user account is there, net winnings, on that amount TDS will be deducted. Next, 194 BB, winning from horse races. So whenever on winning from horse races, if any amount is paid, if the amount of such winning is less than or equal to 10,000, up to 10,000, no TDS will be deducted. If the amount of winning is more than 10,000 rupees, TDS will be deducted. Payer can be any person, payee can be any person, resident or non-resident. Rate of TDS is 30%. When TDS will be deducted? At the time of payment. Is it clear? Now let us discuss section 194C, very important section. Lot many times this section is being asked in the examination. So please listen very carefully. I am going to explain you very clearly. Okay, first, when TDS is required to be deducted under section 194C. When you are making payment for works contract, then TDS is required to be deducted under section 194C. Sir, is there any threshold limit? Yes. For a single contract, if the amount of payment is less than or equal to 30,000, then no TDS is required to be deducted. In a year, you are entering multiple contracts. So for all contracts together, if the amount of payment is less than or equal to 1 lakh, then also TDS is not required to be deducted under section 194C. Is it clear? So for a single contract, if the amount of payment is more than 30,000, so aggregate of all contract payments in a financial year, if it is greater than 1 lakh, then TDS is required to be deducted under section 194C. Who is payer? If payer is other than individual or HUF, mandatorily required to deduct TDS if payment crosses threshold limit. If payer is individual or HUF, then for such individual or HUF, in preceding financial year, if business turnover is less than or equal to 1 crore, in profession if gross receipts are less than or equal to 50 lakhs, no TDS. However, if payment for works contract is made by individual or HUF, and for such individual or HUF, in preceding financial year, if business turnover is greater than 1 crore, or in preceding financial year, if gross receipts in profession are more than 50 lakhs, then they are mandatorily required to deduct TDS. Only if payment is made to resident, that means contractor. Only if contractor is resident contractor, then only TDS is required to be deducted under section 194C. Next, what is the rate of TDS? If contractor is individual or HUF, rate of TDS is 1%. If contractor is other than individual or HUF, rate of TDS is 2%. Sir, when TDS is required to be deducted, accrual basis or cash basis, whichever is earlier. The date on which you pass the entry in books of accounts on accrual basis, or the date of actual payment. Out of these two dates, whichever is earlier is there. On that earlier date, TDS is required to be deducted. Next, do you remember 44 AE? Who is eligible to choose 44 AE? Those who are engaged in the business of plying, hiring or leasing of goods carriages, and they should own less than or equal to 10 vehicles at any point of time during the previous year. Do you remember? So like when you are making payment to transport contractor, and for that transport contractor, he owns less than or equal to 10 vehicles at any time during the previous year. For such transport contractor, if you are making payment, then no TDS is required to be deducted. Next, let's say I am a practicing chartered accountant. In preceding financial year, my gross receipts are more than 50 lakhs. Now I am required to deduct TDS under section 194C, right? Even though I am required to deduct TDS under section 194C, for my personal purpose, if I make any works contract payment, on such works contract payment, no TDS is required. That means even though individually is required to deduct TDS under section 194C, but if payment is made exclusively for personal purposes of such individual or HUF, then TDS is not required to be deducted under section 194C. Is it clear? For example, there is a case going on with regard to my building. I approached a lawyer. I asked a lawyer to argue in court on behalf of me. For that, I paid lawyer 60,000 rupees professional fees. On that, TDS is required to be deducted, but TDS is required to be deducted under section 194J. That is example for professional fees. Now, let's say for my personal purpose, I am constructing a building. For contractor, I made payment. So for my personal purpose, I am constructing building and I made payment of 10 lakh rupees to contractor. Even though I am required to deduct TDS under section 194C, for my personal purpose, I am constructing the building and I am making payment to contractor. On that 10 lakhs, I am not required to deduct TDS under section 194C. Is it clear? So for exclusively for personal purpose, if any contract payment is made, no TDS is required to be deducted under section 194C. Is it clear? Now, sir, what do you mean by works contract? Advertising contract, broadcasting, telecasting, including production of programs for such broadcasting or telecasting. Let's say news channel is there, or for example, entertainment channel is there. You know Jabardast show. Let's say Jabardast show is there. That Jabardast show is already shot by one production company. Now ETV Limited went to production company and purchased Jabardast show. So whenever the content is purchased, TDS is not required to be deducted under section 194C because it amounts to sale contract. Second example, ETV called ABC Limited Production Company and ETV told like Dasara is coming. For Dasara, I wanted to telecast an event. And ETV asked that particular Mallamala Productions Private Limited, that particular production company, to prepare a video for telecasting on Dasara and titled Dasara Sambaralu. Now, Mallamala Productions Limited will prepare the entire video as per the requirements of ETV. So, how ETV wants that video to be prepared? As per the specifications or requirements of ETV, the content will be prepared and that video will be given to the ETV. In this case, everything is provided as per the requirements of the customer. So, if everything is provided as per the requirements of the customer and ultimately if it is handed over to the customer, this type of contract we call as works contract. On such works contract, TDS is required to be deducted under section 194C. Another example I will give. Like I went to a shop, already white shirt is there, I purchased. So this is sale contract from his point, no TDS is required. I went to a shop, I purchased white cloth. I went to the tailor, I gave white cloth to the tailor and gave measurements. Tailor stitched shirt and gave it to me. In this case, tailor is taking material from me, he is making alterations, he is making alterations as per my requirements or as per my specifications. In this case, whatever the tailor charges are there, that amount we can call as works contract. Are you able to understand? So if already prepared product is purchased, it amounts to sale contract, no TDS under section 194C. If content is prepared as per the requirements of the customer and it is given to the customer, then it amounts to works contract and TDS is required to be deducted. Advertising contract is there. Advertisement is prepared as per my requirements. Now when I am making payment, TDS is required to be deducted by me under section 194C. Already advertisement is prepared. I went to advertisement production company and I purchased the advertisement. On this purchase, no TDS is required to be deducted. Is it clear? Next, carriage of goods or passengers by any mode of transport other than by railways. Like I wanted to take students on a trip to Goa. I have two options. First, like we all can go to bus stand and from bus stand we can go. That is option 1. When I purchase ticket in a bus, it amounts to sale contract. I am not required to deduct TDS. Second option, like I hired a bus. Okay, this bus will start on a particular date and it will go to Goa, and on that same bus I am going to come from Goa to Vijayawada, okay, with all the students. Now whenever I hire a bus, like I require to make lump sum payment, right? So for the bus owner. Now in this case, TDS is required to be deducted under section 194C. It amounts to works contract. See, whenever I get into RTC bus, he will not stop where I want. But whenever I hire a bus, the driver will stop the bus wherever I want. So he is acting as per my requirements. So for that case, if I make any payment, it amounts to works contract and TDS is required to be deducted. Many students will get doubt. Sir, whenever you hire a bus, it amounts to rent, right? It does not amount to rent because I am not only hiring bus. Along with bus, the person is also providing driver, he is also providing cleaner, he is only taking care of petrol, he is only taking every toll charges, he is only taking care of everything, and I am paying lump sum amount. So this does not amount to rent contract, this amounts to works contract, and at the time of making payment I am required to deduct TDS under section 194C. Is it clear? Next, catering. Even catering also, like if already prepared food, I went to restaurant, purchased food, no TDS required. Second case, in my office every day, like I gave contract to some X company, it will provide food in my office on a daily basis. At the end of the month, I will make payment and I will tell what is the menu. Based on my requirements, he will prepare menu and provide food to me. This amounts to works contract. Okay. Next, see, manufacturing or supplying a product according to requirement or specification of a customer by using material purchased from such customer or from customer's associate. So whenever material is taken from customer or customer's associate, I have discussed associate definition under 40A to B. Excess payment made to relative or close associate, excess payment made to specified person not allowed as deduction. Do you remember? There I have discussed the definition of relative, I have discussed the definition of specified person. If you do not remember, go to PGBP and watch that video. So whenever material is taken from customer or customer's relative or specified person and using that material as per the requirements of customer, if any alteration is made and given to the customer, it amounts to works contract and TDS is required to be deducted under section 194C. Sir, what is not called as works contract? What is excluded from works contract? Manufacturing or supplying a product as per requirement or specification of a customer by using raw material purchased. See, purchased from any other person. What do you mean by this? I went to tailor shop. I just gave measurements. That's it. Tailor himself purchased white cloth. Tailor himself like he stitched the shirt and gave it to me. In this case, I am not giving the raw material. Tailor only purchasing raw material from third party. So whenever raw material is taken from any person other than the customer, so whenever raw material is purchased from third party other than customer and using that raw material, if any specific like if any modifications are done as per requirements of customer and it is given to the customer, it does not amount to works contract. I will tell another example. For a function, glasses are to be distributed. I went to glass shop. Like I purchased 100 glasses. I want to label a date on glass. Now glass price is 50 rupees. If label is engraved on it, 60 rupees will be charged, extra 10 rupees. So like I purchased glasses and the same shop owner, he is also providing service of engraving on it. Now here what happens, like here whatever the engravement that is done is there, even the engravement is done, it does not amount to works contract, it simply amounts to sale contract. Is it clear? Second case, let's say I purchased all those glasses, I went to another person and I gave it and like engraving I have done separately. Whenever engraving is done separately on a glass, it amounts to works contract because I purchased it from one person, I went to second person. From second person point of view, material is taken from the customer and on that he has done some job work, he has engraved on it and he gave it to the customer. So it amounts to works contract and TDS is required to be deducted under section 194C. Is it clear? So like if seller himself is providing extra service, it does not amount to works contract. So like after purchasing material from the seller, if extra work is done from another person, it amounts to works contract because another person is taking material from the customer and he is doing the job work. Is it clear? Next. Construction contracts. Normally if material is taken from customer and modifications are done and it is given, it amounts to works contract. If material is purchased from outsider, third person other than customer, it does not amount to works contract, it amounts to sales contract. But in case of construction contracts, even though material is purchased from third person, still it is considered as works contract and TDS is required to be deducted. Builder came, I told I want 4 floors building, painting, tiles, whatever the bricks, cement, sand, everything you bring, I will give lump sum amount of 1 crore rupees. In this case, material is not provided by me, material is not provided by customer, but material is purchased from third party and that material is used in construction. Even though material is purchased from third party, still whatever the contract payment that I am making, it amounts to works contract only and I am required to deduct TDS under section 194C. Is it clear? So generally, if material is purchased from third person other than customer, no TDS under section 194C. But in case of construction contracts, even though material is purchased from third party, still it amounts to works contract and TDS is required to be deducted under section 194C. Is it clear? Next, on any payment, if TDS is required to be deducted under section 194J, no TDS is required to be deducted under section 194C. Is it clear? Next, another point, I went to tailor, right? I purchased cloth. Cloth cost is 1000 rupees. Tailor stitched it. He gave bill of 1800 rupees. In that 1800 rupees, in that bill, there is no breakup. What is the amount of raw material? What is the amount of stitching charges? If breakup is not there, means on total 1800 rupees, I am required to deduct TDS. Bill gives clear bifurcation. Value of cloth is 1000 rupees, stitching charges are 800 rupees. Whenever bifurcation is given, then only on contract payment 800 rupees I am required to deduct TDS. Is it clear? Next. See this point. In case the owner or seller of natural gas sells as well as transports the gas to the purchaser till the point of delivery. Now, I am purchasing gas. He said gas cylinder cost is 1000 rupees. Transportation charges are 50 rupees. Now, just because he has done transport on 50 rupees, I am not required to deduct TDS under section 194C, because main contract there is purchase of cylinder. Transportation is ancillary activity. I told you, after selling the product, if seller provides extra service, on that no TDS under section 194C. I told example of glass. So here in this case, gas is supplied to me along with the transportation. So including transportation, he is charging me 1050 rupees. Even 1050 also amounts to sales contract. It does not amounts to works contract, and no TDS under section 194C. Is it clear? This point you read, you will understand. If you have listened carefully till now, this point is very easy. You will understand. Okay. Next, let us discuss section 194D, insurance commission. Generally, insurance companies will pay commission to their agents, right? So before paying such commission, TDS is required to be deducted under section 194D. Sir, how to remember? D represents a death. Insurance agent always speaks about death. That's how he will make all the policies. That's how we should remember. Whenever insurance company makes payment of insurance commission to the agent, insurance company is required to deduct TDS under section 194D. If the amount of commission paid in a financial year is less than or equal to 5000, no TDS is required to be deducted. If the amount of commission in a financial year is more than 15,000, then TDS is required to be deducted under section 194D. Payer can be any person, but payee should be resident in India. That means only if insurance commission is paid to resident agent, then only TDS is required to be deducted. What is the rate of TDS? See, 5% if payee is non-corporate resident, 10% if payee is a domestic company. That means if insurance commission is paid to domestic company, 10% TDS is required to be deducted. Other than domestic company, for any other resident person in India, if insurance commission is paid, 5% TDS is required to be deducted. When TDS is required to be deducted, accrual basis or cash basis, whichever is earlier, at the time of entry in books of accounts or at the time of payment, whichever is earlier. Next, 194DA. Any sum under a life insurance policy. You know life insurance policy, right? Every year we will pay certain amount. Like tenure will be there, 10 years. During these 10 years, if the person who paid the premium, if he dies, means lump sum amount will be given to the like person's family. If person does not die, means after completion of tenure, maturity amount will be given to the person who paid insurance premium, that we call as life insurance policy. So whenever ultimate settlement, that means maturity amount including bonus will be paid to the SC is there. If before paying that amount, TDS is required to be deducted under section 194DA. Here important thing is, after death of the person, whatever the amount compensation given to person's family is there, that is not taxable, that is exempt under section 1010D. Whenever income is exempt, no tax is required to be paid. That's why TDS is not required to be deducted under section 194DA. So after death of the insured, if compensation is given to insured's family, such compensation is fully exempt and it is not taxable in the hands of insured family. So at the time of making such payment, no TDS is required to be deducted under section 194DA. In section 80C, in chapter 6 reductions we have discussed. Before 1st April 2012, how much reduction is allowed? Like if LIC policy is taken before 1st April 2012, maximum deduction allowed is equal to actual life insurance premium or 10%, 20% of sum assured, whichever is lower. On or after 1st April 2012, actual life insurance premium or 10% of sum assured. On or after 1st April 2013, like if policy is taken for disabled persons, actual life insurance premium or 15% of sum assured, whichever is lower. So if actual life insurance premium is less than these amounts, less than 10%, 15% or 20% of sum assured, in those cases maturity amount received is not taxable. Maturity amount received is fully exempt under section 1010D. Whenever maturity amount is fully exempt, in those cases TDS is not required to be deducted under section 194DA. Whenever maturity amount is taxable, when maturity amount is taxable, if actual life insurance premium is greater than 20% of sum assured or greater than 10% of sum assured or greater than 15% of sum assured, in those cases maturity amount is taxable. Whenever maturity amount is taxable and if maturity amount is given, in such case TDS is required to be deducted under section 194DA. If amount of aggregate amount of maturity amount including bonus paid to SSE is less than 1 lakh rupees, no TDS is required to be deducted. That means whenever life insurance policy matures and maturity amount including bonus is received, if such maturity amount including bonus is greater than 1 lakh rupees or equal to 1 lakh rupees, then only TDS is required to be deducted under section 194DA. Payer can be any person, payee should be resident in India. When TDS is required to be deducted at the time of payment. Here, important thing is TDS is required to be deducted on income component, not on maturity amount. That means for checking threshold limit, we will see maturity amount, but TDS will not be deducted on maturity amount. TDS will be deducted on income component. I will tell one example. LIC policy taken on 9th December 2020. 2020 means after 1st April 2012, right? After 1st April 2012, what is the maximum deduction allowed? 10% of sum assured, actual life insurance premium or 10% of sum assured, correct? So life insurance premium is 20,000 rupees per annum. Sum assured is 1,40,000. How much is sum assured? 1,40,000. Now, how much is actual life insurance premium? Let's say premium is for policy is for 3 years. What is the tenure? Tenure is 3 years. Tenure is for 3 years. Now, how much is actual life insurance premium? 20,000. How much is 10% of sum assured? 10% of sum assured is 14,000. Here, actual life insurance premium is greater than 10% of sum assured. In this case, maturity amount is taxable. Whenever maturity amount is taxable, then TDS is required to be deducted under section 194DA. Is it clear? How much? TDS will not be deducted on maturity amount. TDS will be deducted on income component. How to calculate income component? You have to take maturity amount. How much is maturity amount? 1,40,000. After 3 years, 1,40,000 will be received. Less. How much is premium paid for 3 years? Premium paid for 3 years is equal to, how much is premium? 20,000, right? 60,000. How much is balance? Balance is 90,000. On this 90,000, 5% TDS is required to be deducted. Are you able to understand? If maturity amount is paid on or after 1st October 2024, careful, new amendment. From 1st October 24 onwards, TDS rate was reduced from 5% to 2%. So if maturity amount is paid on or after 1st October 2024, please remember you should not deduct 5% TDS, you should deduct 2% TDS. Is it clear? So TDS is required to be deducted on income component. Very important. For checking threshold limit, we will check maturity amount. If maturity amount that is paid is greater than 1 lakh, TDS is required to be deducted. However, TDS will not be deducted on maturity amount, but TDS will be deducted on income component. Is it clear? Next. 194G. Any income by way of price, commission, remuneration on sale of lottery tickets. See, lottery organizer will be there, and lottery ticket selling agent will be there. Ticket selling agent. Whenever lottery organizer pays remuneration or commission to lottery ticket selling agent, if such remuneration or commission is less than or equal to 15,000 in a financial year, 15,000 only, right? Yes. Less than or equal to 15,000 in a financial year, no TDS. If that remuneration or commission is greater than 15,000 in a financial year, then TDS is required to be deducted under section 194G at the rate of 5%. Is it clear? So whenever lottery organizer pays a commission to lottery ticket selling agent, whatever the commission component is there, if such commission component is less than or equal to 15,000 in a financial year, no TDS is required to be deducted. If commission paid is greater than 15,000 in a financial year, TDS is required to be deducted. Rate of TDS 5%. There is a change. From 1st October 24 onwards, rate of TDS that is required to be deducted is only 2%. Very important recent amendment which was there in Finance Act 2024. Is it clear? Payer can be any person, payee also can be any person, resident or non-resident. When TDS is required to be deducted at the time of entry, I mean at the time of credit entry in books of accounts or at the time of payment, accrual or cash, whichever is earlier. Next, 194H, commission or brokerage other than insurance commission. Why? Because for insurance commission separate section is there, 194D. So other than insurance commission, if any other commission is paid, for such commission TDS is required to be deducted under section 194H. Is it clear? For example, a company wants to purchase a land for the purpose of its business. So like it went to broker. Broker charged 1% commission. Value of land is 2 crores. 1% commission means 2 crores into 1%, 2 lakh rupees. Now, company is required to pay 2 lakh rupees commission to the broker. On such commission, TDS is required to be deducted under section 194H. Same here also, if the amount of commission is less than or equal to 15,000 in a financial year, no TDS is required to be deducted. Payer, same as 194A. The person who is paying commission, if that person is other than individual or HUF, mandatorily required to deduct TDS if payment crosses threshold limit. The person who is making commission payment, if such person is individual or HUF, then we have to check for such individual or HUF in preceding financial year if business turnover is less than or equal to 1 crore or in professional gross receipts are less than or equal to 50 lakhs, no TDS is required to be deducted. Otherwise, the individual or HUF who is making commission payment, for them in preceding financial year if business turnover is more than 1 crore or in preceding financial year in profession if gross receipts are more than 50 lakhs, TDS is required to be deducted under section 194H at the rate of 5% with effect from 1st October 24. TDS required to be deducted is 2%. Payee, that means the person who is receiving the commission, such payee should be resident in India. That means when you are making commission payment to non-resident, like 194H will not get attracted. In those cases, 195 gets attracted. Okay. When TDS is required to be deducted at the time of entry in books of accounts or at the time of payment, whichever is earlier. When BSNL or MTNL pays commission to their public call office franchises, on such commission payment, BSNL or MTNL are not required to deduct TDS. Next, payment made by TV channel or newspaper company to advertising agency for booking or procuring or canvassing for advertisement payment is not treated as a discount and not commission. So TDS under section 194H is not applicable. What do you mean by this? For example, I started a new brand called Umas Phoenix. Now, I wanted to give advertisement. I approached like one advertising agency. That name is ABC Advertising Agency. Okay, this advertising agency books a time slot in a TV channel or newspaper. Let's say I wanted to give advertisement in newspaper as well as TV channel. Let's say TV name is GTV. Now I paid advertisement fees of 80,000 rupees. On this 80,000 rupees, I am required to deduct TDS under section 194C. Okay. Now, advertising agency got 80,000, right? Out of 80,000, it retained 15,000 rupees and balance 65,000 rupees is given to TV channel. Now, whatever this 15,000 is there, this 15,000 is profit of advertising agency, right? Profit of advertisement agency. And this 15,000 rupees is expenditure to TV channel, right? Actually, TV channel income is 80,000 rupees. Out of 80,000 rupees, TV channel is sacrificing 15,000 rupees to advertising agency. So whatever this expenditure 15,000 is there, this is considered as discount. It is not considered as interest or commission. This is discount and not a commission. So if it is not a commission, TDS under section 194H is not applicable. Is it clear? So whenever customer pays to advertising agency, on that payment customer is required to deduct TDS under section 194C. Advertising agency will retain certain amount and balance amount will be paid to news channel or newspaper. So for news channel or newspaper, whatever the amount 15,000 is there, that is actually expenditure, and that expenditure is termed as discount and it is not termed as commission in one of the case law. As it is not a commission, no TDS is required to be deducted by TV channel under section 194H. Is it clear? Now let us discuss section 194I. When 194I gets attracted, whenever rent is paid, then section 194I gets attracted. Rent can be paid either for land, building or furniture or plant and machinery or equipment. Many people think that only for building or house property, if any rent is paid, then only 194I gets attracted. No, that's not correct. Even for paying rent for plant and machinery or furniture or equipment, when you are paying the rent, TDS is required to be deducted under section 194I. Deloitte, one company is there. It took 100 ACs on rent. Every month it is paying rent. 100 ACs into, let's say rent per AC is 2000 rupees. So 100 into 2000, how much? Every month it is paying 2 lakh rupees rent. On the 2 lakh rupees rent, Deloitte is required to deduct TDS. For what rent is paid? Rent is paid for ACs, air conditioners, plant and machinery. Still TDS is required to be deducted under section 194I. Sir, is there any threshold limit? Yes. In 1 year, if the amount of rent paid is up to 2,40,000, no TDS is required to be deducted. In 1 year, if the amount of rent paid is more than 2,40,000, then TDS is required to be deducted under section 194I. So 2,40,000 threshold limit is applicable per annum, not per month. Okay, next, like you are paying rent for that house property, there are co-owners. Now for each co-owner separately 2,40,000 threshold limit is applicable. That means when you are making payment of rent to the co-owner, for co-owners, for each co-owner you have to check separate threshold limit of 2,40,000. So for each co-owner, if the amount of rent is more than 2,40,000, then TDS is required to be deducted under section 194I. Who is payer? Same as 194A. So the person who is paying rent, if he is other than individual or HUF, mandatorily required to deduct TDS if rent payment crosses 2,40,000. If the person who pays rent is individual or HUF, for that individual or HUF, check in preceding financial year business turnover less than 1 crore, in profession gross receipts less than or equal to 50 lakhs. No TDS is required. The individual or HUF who is paying rent, for them in preceding financial year, in business if turnover is greater than 1 crore, in profession if gross receipts are greater than 50 lakhs, they are mandatorily required to deduct TDS if the amount of rent per annum is more than 2,40,000 rupees. Is it clear? Next, only if rent is paid to, that means landlord or the owner. If owner is resident, then only section 194I gets attracted. So the person to whom payment is made, payee, if the payee is resident, then then only TDS is required to be deducted under section 194I. What is the rate of TDS? For plant and machinery equipment, rate of TDS is 2%. AC, every month 2 lakhs rent is paid for air conditioners, right? On 2 lakhs 2%, 2 lakhs into 2% means 4,000. So out of 2 lakhs, 4,000 TDS will be deducted and balance 1,96,000 will be paid to the government. Is it clear? So on land, building, furniture, fixtures, rate of TDS applicable is 10%. Sir, when TDS is required to be deducted? Accrual basis or cash basis. That means like I did not pay rent, but in my books of accounts I passed accrual entry of rent. Okay, rent account debit to landlord. Okay, whenever I pass accrual entry in my books of accounts, either that date or whenever I made payment of rent, date of payment of rent, date of accrual of rent or date of payment of rent, whichever is earlier. Are you able to understand? Next, no TDS on refundable deposits. For example, like initially advance will be taken. I have one building. I wanted to give this building on rent to a company, first floor. I said the rent per month is 30,000 rupees. I asked them to give 3 months advance. 30,000 into 3, 90,000 rupees advance was given to me. This advance is to be given back at the time when they are vacating my house. So whatever the refundable advance is there, on refundable advance, TDS is not required to be deducted. Another important point. See, sometimes at the end, like house is given on rent for 1 year. They paid rent for 9 months. 10th month, 11th month, 12th month, they did not pay rent. They asked me to adjust initial advance against last 3 months. So whenever I apply refundable advance against rent for last 3 months, at that time they are required to deduct TDS. Is it clear? So whenever refundable advance is adjusted against rent, at that time TDS is required to be deducted. Whenever refundable advance is taken, no TDS is required to be deducted. Next. See, whenever cooling charges are paid to cold storage, you know cold storage, right? Let's say I have some goods, they are to be stored in a frozen condition. I went to cold storage, I gave them goods to keep those goods in a frozen state. I paid cooling charges. Okay, so whatever the cooling charges that I have paid, on such cooling charges, TDS under section 194I is not applicable, but TDS under section 194C is applicable. The reason is, see, like he is not giving me cold storage on rent. Okay, I just gave him the goods. In that entire cold storage, wherever he wants, he can keep it, and like he can keep at the temperature at the temperature that I requested. That means I did not have grip over the cold storage. I just gave him goods, like he is storing it and he is also providing ancillary services. So it does not amount to rent contract, but it amounts to works contract, and TDS is required to be deducted under section 194C. Is it clear? So you can see provisions of section 194C will be applicable to the amounts paid as cooling charges by the customers of cold storage. Next, passenger service fees. See, airlines will pay passenger service fees to airports. On that passenger service fees, airlines are not required to deduct TDS under section 194I. For example, I am flying from Vijayawada to Hyderabad. So I purchased Indigo ticket. Let's say Indigo ticket is 4,500 rupees. So like I will start from Vijayawada. I will go to Vijayawada airport. There I will I give my baggage. I will sit over there. Once the bus comes, I will go in the bus and I will get into the flight. I will take boarding pass. Okay, all these things. That means here I am using Vijayawada airport to start from. So from Vijayawada I am flying to Hyderabad airport. So in Vijayawada airport I am taking services of Vijayawada airport. In Hyderabad also to take baggage and all I am taking services of Hyderabad airport. So like actually I have to pay fees also to Vijayawada airport and Hyderabad airport separately because I am using services of Vijayawada airport and Hyderabad airport. But actually I will not pay. Okay, on behalf of me, as I paid 4,500 rupees, Indigo will pay passenger service fees to Vijayawada airport as well as Hyderabad airport. So out of 4,500 rupees that is taken from me, Indigo will pay, let's say, 300 rupees to Vijayawada airport and 300 rupees to Hyderabad airport. Now Indigo is paying 300 rupees to Vijayawada airport and Hyderabad airport, right? Passenger service fees. On this payment, Indigo is not required to deduct TDS under section 194I. The reason is, whatever 300 rupees that is paid by Indigo is there, for that what are the services that I am receiving? Like I am receiving security services, boarding services. Okay, so like it does not amount to rent contract. Okay, just because I went there, Vijayawada airport is not given on rent to me. Vijayawada airport is providing various kinds of service, security service, boarding service, taking me on bus till the aeroplane is there. So many services are provided. For all these services together, it is charging passenger service fees from Indigo Airlines. So on that amount, it does not amount to rent contract, so no TDS is required to be deducted under section 194I. Is it clear? Next, lump sum lease premium. See, if any lump sum lease premium is paid, so for with regard to a house property, then it will be accounted as per lease accounting, and like after the lease period is over, if the house property goes to the owner, it amounts to finance lease, okay, or it amounts to hire purchase. In those cases, if any lump sum amount is paid initially on the, it does not amount to rent contract, and TDS is not required to be deducted under section 194I. So you can see lump sum lease premium or one-time upfront lease charges which are not adjustable against periodic rent, paid or payable for acquisition of long-term leasehold rights over land or any other property, and not payments in the nature of rent in the meaning of section 194I. Therefore, such payments are not liable for TDS under section 194I. I will tell example. Now, my friend has taken one building on rent for 5 years. Rent per month is 50,000 rupees. I want that building. I will pay 50,000 rupees rent. So I went to my friend. I told him, I will give you 3 lakhs. Whatever the rent agreement that you are having with you for 5 years, please transfer those rent agreement to me for the next 5 years. That means here what am I doing? Like he is the lessee. He has lease right for 5 years. I am purchasing that lease right for 5 years from the lessee. So lessee is getting changed. Are you able to understand? So like I paid 3 lakh rupees to him, like he got out as lessee and I came in as lessee. For next 5 years, that building belongs to me. Okay, I will hold lease rights over it. Now like to get lease rights from my friend, I paid lump sum amount of 3 lakhs. Okay, on this 3 lakh rupees, I am not required to deduct TDS under section 194I. Is it clear? Next. Transfer of immovable property other than rural agricultural land. 194IA, very important. Please listen. This section has more practical utility. In practice, under this section, many clients will come to us. Okay, so listen. Whenever immovable property is transferred, what I said, whenever immovable property is transferred other than rural agricultural land, that means whenever land is transferred or building is transferred, okay, or house property is transferred, first you have to take stamp duty value, you have to take actual consideration. Out of these two, whichever is higher you need to take. Let's say stamp duty value is 52 lakhs, actual consideration is 49 lakhs. Out of these two, whichever is higher means how much? 52 lakhs. Whenever stamp duty value or actual consideration, whichever is higher, if that higher amount is greater than 50 lakhs, then TDS is required to be deducted under section 194IA. Is it clear? Sir, what is the amount of TDS? Amount of TDS is equal to 1% on stamp duty value or actual consideration, whichever is higher. So 1% into how much? Stamp duty value is 52 lakhs, actual consideration is 49 lakhs. Out of these two, whichever is higher means 52 lakhs, right? 52 lakhs into 1%, how much? 52,000. So amount of TDS required to be deducted is 52,000. So whenever, please remember, in practice also this will be useful. Whenever immovable property is transferred and on such a transfer of immovable property, out of stamp duty value or actual consideration, out of these two, whichever is higher you need to take. If that higher amount is greater than 50 lakhs, okay, what is threshold limit? Like if the stamp duty value or actual consideration, whichever is higher is there, out of that higher amount, if it is less than 50 lakhs, no TDS is required to be deducted. Stamp duty value or actual consideration, whichever is higher, if that higher amount is greater than or equal to 50 lakhs, then TDS is required to be deducted under section 194 IA. Is it clear? Next. Payee should be resident transferor. That means seller, whoever the seller of immovable property is there, he should be resident. Then only TDS under section 194 IA gets attracted. Rate of TDS is 1% of stamp duty value or actual consideration, whichever is higher. When TDS is required to be deducted, at like on accrual basis or cash basis, whichever is earlier. On sale of rural agriculture land or on purchase of, let's say I purchased 80 lakhs worth of rural agriculture land. 80 lakhs, it is greater than 50 lakhs, still no TDS is required to be deducted under section 194 IA because immovable property other than rural agriculture land. Whenever you purchase rural agriculture land, TDS under section 194 IA is not applicable. Is it clear? So if consideration is 50 lakhs or more and only part payment is made, like recently yesterday night only I filed this return. One client is there, he purchased one flat for 1 crore 12 lakhs. But entire 1 crore 12 lakhs he did not pay in a single installment. Okay, every month he is paying 5 lakh rupees EMI. Now every month he is paying 5 lakh rupees, right? Whenever part payment is made, that means whenever principal amount is paid in installments, for each installment you are required to deduct TDS at the rate of 1%. So on 5 lakhs 1% means it will come, I think 5,000. 5 lakh into 1%, 5,000, right? So every month 5,000 TDS will be deducted and 5,000 TDS will be paid to the government. Is it clear? Simple. Whenever payment is made in installments, TDS is required to be deducted at the rate of 1% of stamp duty value or actual consideration, whichever is higher, for each installment. Is it clear? Next. Consideration shall include all charges of the nature of club membership fee, car parking fees, electricity. See, what real estate people will do, they will say flat cost is only 49 lakhs. They will say car parking fees 5 lakhs, membership fees another 3 lakhs, like this. That means ultimately they want some 80 lakhs or 90 lakhs, but to escape from TDS, they will keep value of flat less than 50 lakhs. What income tax department said, when you are calculating the limit of 50 lakhs, not only consider value of flat, if there is any parking fees, membership fees, electricity fees, water facility fees, include all fees. After including all fees, if the value is greater than 50 lakhs, then TDS is required to be deducted under section 194 IA. Is it clear? Next. Let's say I am purchasing one flat on co-ownership basis. Flat value is 90 lakh rupees. I paid 45 lakhs, my friend paid 45 lakhs. Individually, the value of consideration paid is less than 50 lakhs. Still, TDS is required to be deducted under section 194 IA. Is it clear? So it became a loophole. So like they are purchasing, ensuring that each person's payment is less than 50 lakhs and they are not deducting TDS. So with effect from 1st October 2024, when there is more than one transferor or when there is more than one transferee, consideration paid by all transferees together. So let's say I and my friend paid consideration. Both of our considerations together, if it is greater than 50 lakhs, then TDS is required to be deducted under section 194 IA. Next, 194 IB, rent for immovable property. See, generally for rent, applicable TDS section is 194I. But those who are not required to deduct TDS under section 194I, Who are not required to deduct TDS under section 194I? Individual or HUF in preceding financial year if their business turnover is less than 1 crore, or in profession if their gross receipts are less than 50 lakhs, they are not required to deduct TDS under section 194I. Correct? So those who are not required to deduct TDS under section 194I, they are required to deduct TDS under section 194IB. Is it clear? For example, Mr. R is there. He has a mobile shop. In previous year 23-24, his turnover is 80 lakhs. That means in preceding financial year his turnover is less than 1 crore. Is he required to deduct TDS under section 194I? He is not required to deduct TDS under section 194I. But for this mobile shop, he is paying rent 60,000 per month. That means rent per month is greater than 50,000. That means in case of individual or HUF who are not required to deduct TDS under section 194I, if they are paying rent up to 50,000 rupees per month, they are not required to deduct TDS under section 194IB. If they are paying rent more than 50,000 per month, they are required to deduct TDS under section 194IB. Is it clear? So those who are not required to deduct TDS under section 194I, if they are paying rent of more than 50,000 per month, they are required to deduct TDS under section 194IB. Is it clear? So if the rent per month is less than or equal to 50,000, no TDS is required. If rent per month is more than 50,000, they are required to deduct TDS under section 194IB. Sir, when TDS is required to be deducted? Every month TDS is not required to be deducted. TDS is required to be deducted for the last month. In a financial year, when is the last month? March. So either in the month of March, TDS will be deducted. If tenant vacates the house property before March, in such case, during the month when he vacates the house property, in that month TDS is required to be deducted. Let's say tenant vacated the property in the month of December. In such a case, tenant is required to deduct TDS in the month of December. So TDS is required to be deducted either in the month of last month of the previous year, nothing but March, or last month of the tenancy if property is vacated during the year, or at the time of payment, whichever is earlier. That means what? On accrual basis, you have to take last month. That means either March month or in the month tenant vacates the house property. That is the date or date of payment of rent for March month, or date of payment of rent for the month in which tenant vacates the house property. So out of these two dates, whichever is earlier, we need to deduct TDS. For example, tenant is vacating the house property in the month of December. When he vacated in the month of December, but he paid rent in the month of February. Now TDS is required to be deducted at the end of December month. Are you able to understand? So last month of the previous year, or last month of the tenancy, or date of payment, out of these two, whichever is earlier. Okay, it's not lower, whichever is earlier. Earlier is December month end. So by December month end, TDS is required to be deducted. Is it clear? Next. Only if rent is paid to resident, then only TDS is required to be deducted. Rate of TDS is 5%, but from 1st October 2024, rate of TDS was reduced from 5% to 2%. So from 1st October 2024, you are required to deduct 2% TDS. Is it clear? So what is rent here? 60,000, right? Rent is equal to 60,000 into 12 months. How much? 7,20,000. Correct? How much is March rent? March rent is 60,000. From March rent, TDS is required to be deducted. Less TDS at the rate of 5% up to 30th September. 2% from 1st October. So up to 30th September, how much is the rent? Up to 30th September, rent is 3,60,000. 3,660,000. Up to 30th September means how many months? 6 months. 60,000 into 6 months, 3,60,000 into 5% plus 3,60,000 into 2%. How much? 25,200 TDS will be deducted. Balance 34,800 will be paid to the owner. Is it clear? This 25,200 will be paid as TDS to government. Now let us discuss section 194J. 5 payments are covered under 194J. How many? 5. What are they? Fees for professional service, fees for technical service, royalty, non-compete fees, director's remuneration. So any one of these 5 payments, if they are made, then TDS is required to be deducted under section 194J. For first 4 payments, threshold limit is 30,000. For last payment, there is no threshold limit. That means director's remuneration, even though you pay 10 rupees, you are required to deduct TDS. Are you able to understand? So for in remaining cases, TDS is required to be deducted only if payment crosses 30,000 in a financial year for each category. For professional fees, 30,000 separate limit. For technical fees, 30,000 separate limit. For royalty, 30,000 separate limit. For non-compete fees, 30,000 separate limit. Okay. Now, sir, who is the payer? See, if payer is, listen carefully, it looks similar, but it is not similar. Listen carefully, you will understand. Payer other than individual or HUF. Mandatorily required to deduct TDS. Mandatorily required to deduct TDS if payment crosses threshold limit. If payer is individual or HUF, then we have to check. In preceding financial year, in business, if turnover is less than or equal to 1 crore, in profession, if gross receipts are less than or equal to 50 lakhs, not required to deduct TDS. In case of individual or HUF, in preceding financial year, in business, if turnover is more than 1 crore, in profession, if gross receipts are more than 50 lakhs, then if nature of payment is royalty or non-compete fees, no TDS. That means in case of individual or HUF, even though in preceding financial year business turnover is more than 1 crore, even though in preceding financial year gross receipts in profession are more than 50 lakhs, still they are not required to deduct TDS when they are making payment of royalty or non-compete fees. Is it clear? Next, if they are making payment for professional services or if they are making payment for technical fees, then they are required to deduct TDS. Required to deduct TDS if payment crosses threshold limit. Is it clear? That's it. Payee resident. That means all these payments, only if they are paid to resident, then only 194J gets attracted. 194C, 194J, very, very important. Listen 1 or 2 times. Practice and then only go. 194C, 194J, 194I. Don't go to the examination without studying these provisions. Only if these payments are made to resident, then only TDS is required to be deducted under section 194J. What is the rate of TDS? For technical fees, rate of TDS is 2%. Next, if payment is made to call center, on such payment TDS is required to be deducted at the rate of 2%. Next, like royalty paid on sale or distribution of exhibition of cinematographic films. See, there will be producer, there will be distributor, there will be exhibitor. Exhibitor means nothing but theater. Exhibitor means theater. Now, theater will pay royalty to distributor. Distributor will pay royalty to producer. On this royalty, rate of TDS is 2% under section 194J. Is it clear? So whenever exhibitor pays royalty to distributor or whenever distributor pays royalty to producer, on such royalty TDS is required to be deducted at the rate of 2%. In remaining other cases, professional fees, director's remuneration, non-compete fees, in remaining all cases, rate of TDS is 10%. When TDS is required to be deducted, date on which credit entry is passed in books of accounts. That means date on which that expenditure is recognized in books of accounts on accrual basis or date of payment, whichever is earlier. Then on that date TDS is required to be deducted. Another thing, see, like one student filed a case against me. Sir, Umasankar sir is not a chartered accountant. Now, this is relating to my profession. In preceding financial year, my gross receipts are, let's say, greater than 50 lakhs. So now I have to defend that I am a chartered accountant. So I went to lawyer, I gave him, sir, this is my final marks list. In CA final, I qualified, see the marks list. And this is the certificate issued by ICI that I am the member of the institute. Okay, and this is my certificate of practice. All these documents I gave to the lawyer and I asked the lawyer to defend in court of law. For that I paid him professional fees of 60,000 rupees. Now I am paying lawyer fees, legal fees with regard to my profession. On that lawyer fees I am required to deduct TDS under section 194J. So if any person says that he is a chartered accountant, don't believe blindly. Ask them their membership number. Okay, my membership number is 258255. You can search, like because there are many people right now in the market who will portray themselves as chartered accountants even though they are not. So don't trust them blindly. Now, second case, there is my land. With regard to my land, one person came and he filed a case in the court that my land belongs to him. Now I want to defend. I have to go to the court and I have to defend that this land belongs to me. So I appointed lawyer. I gave these land documents and all documentation. So lawyer went to the court and defended my case. Lawyer proved that this land belongs to me only. Now I have to pay lawyer fees. I paid lawyer fees of 40,000 rupees. Listen, in preceding financial year, in my profession, gross receipts are more than 50 lakhs. Even though gross receipts are more than 50 lakhs, in current financial year, I am paying lawyer fees. I am paying professional fees for my personal purpose, for land that is personally belonged to me. Okay. So with regard to exclusively for personal purpose, if any professional fees is paid, on such professional fees, TDS is not required to be deducted even though in preceding financial year business turnover is more than 1 crore or in profession gross receipts are more than 50 lakhs. So write down here like royalty, non-compete fees exclusively for personal purpose. Exclusively for personal purpose, if any professional fees or technical fees is paid. Then also no TDS under section 194J. Is it clear? Next, third party administrators. See, you know medical insurance company, right? Like let's say Star Health Insurance Company. I took medical insurance for my parents. So likewise, like me, many people will take medical insurance from Star Health Insurance Company. Now, all of them, like if there is any problem, they will join in hospital and bills will be paid by Star Health Insurance Company. Now, at the end of every month, Star Health Insurance Company is required to pay thousands of bills to various hospitals. So what Star Health Insurance Company will do? It will appoint third party administrator. Third party administrator will make hospital bills payment to every hospital on behalf of Star Health Insurance Company. So whenever third party administrators are making payment to hospitals with regard to insurance companies, on such payment they are required to deduct TDS under section 194J, because hospitals, like let's say I got hospitalized, I claimed insurance. Now, who will pay hospital bill? I will not pay hospital bill. Medical insurance company will pay hospital bill. In fact, medical insurance company also will not pay. Medical insurance company will make payment to third party administrator. Third party administrator will pay bill to the hospital. That means in this case, hospital is providing professional services to third party administrator and insurance company. So as it is a professional service, like third party administrators, before making payment to hospital, they are required to deduct TDS under section 194J. Is it clear? Next, whenever like sports activities, whenever professional fees is paid to sports persons, umpires, referees, coaches, trainers, team physicians, physiotherapists, then also event managers, commentators, anchors, sports columnists, for all these people also TDS is required to be deducted under section 194J. Yesterday, like whatever, like cricket match is happening, professional fees is paid to each player. On that professional fees, TDS is required to be deducted under section 194J. Professional fees will be paid to umpires. Professional fees will be paid to commentators, anchors. For them also TDS is required to be deducted under section 194J. Is it clear? Next, 194K. Do you remember section 194 dividend? Same. Dividend is paid on shares. Here dividend is paid on units. So on units of mutual fund, if any dividend is paid, then TDS is required to be deducted under section 194K. If the amount of dividend is less than or equal to 5,000, no TDS. If the amount of dividend is more than 5,000, then TDS is required to be deducted under section 194K. Payer can be any person, but payer should be resident in India. Rate of TDS is 10%. When TDS is required to be deducted, accrual basis or cash basis, whichever is earlier. But let's say I sold units. On sale of units, capital gains will get attracted, right? So with regard to capital gain amount, TDS is not required to be deducted under section 194K, only on revenue nature of income. That means if any dividend is paid on units, on such dividend, TDS is required to be deducted under section 194K. Is it clear? Next, 194LA, compensation or enhanced compensation on compulsory acquisition of immovable property. Do you remember section 45(5)? Compulsory acquisition of capital asset. Year of transfer is year of compulsory acquisition. Year of taxability is year in which compensation is received from government. If compensation is received in installments, entire compensation is taxable in the first year in which installment is received. Period of holding will be calculated from date of purchase up to the date prior to the date of compulsory acquisition. Indexation will be calculated from year of purchase to year of compulsory acquisition. Do you remember in capital gains we have discussed? If you forget, booster lecture is available only. Go and watch capital gains. Okay. So whenever government do compulsory acquisition, government will pay compensation, right? If the amount of compensation is less than or equal to 2,50,000 in a financial year, then no TDS is required to be deducted. If the amount of compensation paid by government is more than 2,50,000 in a financial year, then government is required to deduct TDS at the rate of 10%. Please remember, if agricultural land is compulsorily acquired, then TDS is not required to be deducted under section 194LA. Is it clear? So you can see compensation on acquisition of agricultural land. Agricultural land compulsorily acquired, no TDS under section 194LA. Other than agricultural land, if any immovable property is compulsorily acquired by government, and if the amount of compensation paid in a financial year is more than 2,50,000, then TDS is required to be deducted under section 194LA at the rate of 10%. Payer can be any person, but payee should be resident in India. Is it clear? Next, 194M. When TDS is required to be deducted under section 194M, those who are not required to deduct TDS under section 194C, 194J, 194H, they are required to deduct TDS under section 194M. Who are not required to deduct TDS under section 194C, 194J, 194H? First, in case of individual or HUF, in preceding financial year, if business turnover is less than or equal to 1 crore, or in preceding financial year, in profession, if gross receipts are less than or equal to 50 lakhs, no TDS is required to be deducted under section 194C, 194J, 194H. Another important point, works contract payment, professional fees, technical fees, if they are paid exclusively for personal purposes of individual or HUF, then also TDS is not required to be deducted under section 194C and 194J. So those who are not required to deduct TDS under section 194C, 194J, 194H, they are required to deduct TDS under section 194M. So under 194C, what is payment? Works contract. Under 194J, fees for professional services. Under 194H, commission. So works contract payment, commission payment, professional fees payment. All of these three, when they are paid to a single person, and all these three together, if aggregate payment is more than 50 lakhs, then TDS is required to be deducted under section 194M. That means like works contract payment, professional fees, commission, all these three together paid to a single person in a single financial year is less than 50 lakh rupees, no TDS will attract. Okay, so you can see aggregate sums of all three payments during financial year does not exceed 50 lakhs. That means works contract payment, commission payment, professional fees, all these three together paid to a single person in a single financial year is more than 50 lakhs, then TDS is required to be deducted under section 194M. Rate of TDS is 5% with effect from 1st October 2024. TDS rate was reduced to 2%. When TDS is required to be deducted? At the time of entry in books of accounts or at the time of payment, whichever is earlier. For example, I will tell. In preceding financial year, gross receipts are only 40 lakhs. In my profession, gross receipts are only 40 lakhs. In 24-25, I am constructing a building, house property for my personal purpose, for my residential purpose. I took loan of 90 lakhs, paid 70 lakhs to contractor. See, whenever payment is made to contractor for construction of building, it amounts to works contract and TDS is required to be deducted under section 194C. Do you remember? Now, even though TDS is required to be deducted under section 194C, I am not required to deduct because in preceding financial year, my gross receipts in profession are less than 50 lakhs. So under section 194C, I am not a payer. I am not required to deduct TDS under section 194C. So I am not required to deduct TDS under section 194C, and in a single financial year for a single contractor, I am paying payment of greater than 50 lakhs. So in this case, I am required to deduct TDS under section 194M. Is it clear? So how much is the payment made? Payment is 70 lakhs. From this 70 lakhs, I am required to deduct TDS at the rate of 5%. Let us assume I made the payment before 1st October. So before 1st October, TDS rate is 5%. 70 lakhs into 5% means 3.5 lakhs TDS will be deducted, and balance 66.5 lakhs will be paid to the contractor. Is it clear? Are you able to understand? This is about section 194M. Next, section 194N, cash withdrawal. See, if the amount is withdrawn by cooperative society, up to 3 crore rupees of withdrawal, no TDS will be deducted. Other than cooperative society, if any other person withdraws cash, if the amount of withdrawal is more than 1 crore rupees, TDS will be deducted. So what are threshold limits? For cooperative society, threshold limit is 3 crores. Up to 3 crores of withdrawal, no TDS will be deducted. For other persons, up to rupees 1 crore. That means threshold limit is 1 crore. Up to rupees 1 crore, no TDS will be deducted. More than 1 crore, if amount is withdrawn, then TDS will be deducted. Let's say in ICICI Bank, I have many accounts. In Vijayawada ICICI Bank, I have one account. Hyderabad ICICI Bank, I have one account. Vizag ICICI Bank, I have one account. All these accounts together. Okay. So threshold limit of 1 crore rupees is to be checked per bank. All branches together, if I withdraw more than 1 crore rupees, then ICICI Bank will deduct TDS to me under section 194N. What is the rate of TDS? Rate of TDS is 2%. Let's say I withdrawn 120 lakhs. Now, TDS under section 194N. Please remember, on 120 lakhs, TDS will not be deducted. Over and above 1 crore, in excess of 1 crore. How much is in excess of 1 crore? In excess of 1 crore is 20 lakhs, right? So 20 lakhs into 2%. How much? 40,000. 40,000 TDS will be deducted and balance 120 lakhs. 1 crore 19 lakh 60,000 will be paid to me. Are you able to understand? So TDS is required to be deducted over and above 1 crore. Whatever the excess amount is there, on excess amount 2% will be deducted. Are you able to understand? Who will deduct TDS? Bank, post office, cooperative bank. When they are paying amount to the customer, then they will deduct TDS. Payee can be any person. TDS will be deducted at the time of payment. Is it clear? So cooperative society 3 crores, other persons 1 crore. TDS will be deducted on excess amount. On total amount, TDS will not be deducted. Rate of TDS 2%. 2% on amount in excess of 1 crore or 3 crores. Exceptions. TDS is not required to be deducted if amount is withdrawn by government. Let's say government withdrawn 80 crore rupees to distribute pension. Now who withdrawn amount? Government withdrawn more than 1 crore rupees. Still bank is not required to deduct TDS. Is it clear? Next, if any amount is withdrawn by banking company, cooperative society or post office. Let's say HDFC Bank has 10 crores with SBI. HDFC Bank withdrawn 10 crores from SBI. On this 10 crores withdrawal, HDFC Bank is not required to deduct TDS. Okay. So if amount is withdrawn by bank or post office or cooperative bank, no TDS will be deducted. Business correspondent of a banking company or a cooperative bank. See, in like if you go to villages, like where population is like 4,000 or less than 5,000, in those villages also bank will be there, but in that bank there will be only one person. That person only will take deposits, that person will only do withdrawals, that person will only open accounts, everything will be taken care by that person. We call them as business correspondents. So this person, like once in a week or once in 10 days, he will come to head office, he will collect money, he will withdraw money, and he will go to that particular bank, and there he will maintain the cash. So whenever business correspondent withdraws money of more than 1 crore, no TDS will be deducted because their money is withdrawn by correspondent for business purpose. Are you able to understand? Next, white label ATM operator. See, ATM vans will be there, right? So for example, let's take Hyderabad. SBI main branch is there. Like ATM operator will go to SBI main branch, he will withdraw 20 crore rupees. This 20 crore rupees will be deposited across 300 ATM machines that are there in Hyderabad. Now what is the job of white label ATM operators? They will go to bank, withdraw money, and withdrawn money will be deposited in various ATMs. Now why the ATM operators are withdrawing money? For business purpose. So whenever ATM operators withdraw money from head office and deposit in various ATMs, there is no requirement to deduct TDS. Is it clear? Next, if person has not filed ITR of last 3 preceding previous years. So like SSC did not file ITR of last 3 previous years, for which due date under section 139(1), you know due date for filing ITR, right? 31st July or 31st October. So person did not file ITR of last 3 preceding previous years, for which ITR due date is also over. In such a case, up to 20 lakh rupees, no TDS will be deducted. Greater than 20 lakhs, up to 1 crore, rate of TDS is 2%. Greater than 1 crore, rate of TDS is 5%. So in case of defaulter of income tax returns, then TDS rate will change under section 194N. So those who did not file ITR of last 3 years, for which due date is completed, for them up to 20 lakh rupees withdrawal, no TDS will be deducted. If they withdraw more than 20 lakhs and up to 1 crore, 2% TDS will be deducted. If they withdraw more than 1 crore, 5% TDS will be deducted. Is it clear? So this is all about 194N. Now let us discuss section 194P. See, specified senior citizen first. Who is called as specified senior citizen? Any individual whose age is 75 years or more at any time during the previous year, we call him as specified senior citizen. Senior citizen means 60 years or more. Very senior citizen means 80 years or more. Specified senior citizen means 75 years or more. For specified senior citizen, one relaxation is given. they are not required to file income tax return. They are already aged 75 and above. So they are exempted from filing income tax return, but subject to satisfaction of some conditions. What are those conditions? Specified senior citizen should have only two incomes. They should have pension income and they should have interest from bank account in which pension is credited. For example, Mr. A is there. He is 76 years. He gets pension from government in SBI bank. So he should have only two incomes. Pension credited in SBI bank and interest received from SBI bank. If interest is received from any other bank, then he is not eligible for relaxation. He is eligible for relaxation. He is eligible for not to file income tax return only if he has two incomes. One is pension income, another one is interest from the bank in which pension is credited. If he has only these two incomes, then he should go to the bank. He should ask the bank manager, sir, I am having only two incomes, calculate my total income. These are my deductions, 80C deductions, 80D deductions. So he should give all the proofs of the deductions. So bank manager will calculate the total income and bank manager will calculate the tax liability. Whatever the tax liability of specified senior citizen is there, the tax liability will be deducted by bank manager from interest credited to that particular specified senior citizen bank account. So as bank manager is already deducting TDS and paying the TDS to the government, again specified senior citizen is not required to file income tax return. Is it clear? So if specified senior citizen is having only two incomes, pension income and interest from bank in which pension is credited, in such a case, like he is required to pay tax liability. He is not exempted from paying tax liability. He is required to pay tax liability. He is exempted only from filing income tax return. So who will pay tax liability? Like specified seniors, on behalf of specified senior citizen, bank manager will deduct a tax amount from his bank account and bank manager will pay TDS to the government. So whatever specified senior citizen account is there, from that account tax liability amount will be deducted in the form of TDS and bank manager will deposit the TDS to the government. Is it clear? So, and bank manager is required to deduct the TDS under section 194P. If total income of specified senior citizen is less than basic exemption limit, then he is not required to pay tax. As he is not required to pay tax, no TDS is required to be deducted under section 194P. So TDS under section 194P is required to be deducted only if total income of specified senior citizen is more than basic exemption limit. Who will deduct TDS? Specified bank. Payee is specified senior citizen. At what rate TDS will be deducted? Slab rates. When TDS will be deducted? At the time of payment. Okay, see exemption. Specified senior citizen is exempted from filing his return of income for the assessment year relevant to the previous year in which tax has been deducted under this section. Total income of specified senior citizen for relevant assessment year shall be computed after giving effect to deductions allowable and rebate. So bank manager, when calculating total income, he will claim all the benefits. He will ask specified senior citizen, do you have any ATC investments or 80D investments? If he has, that will be considered. So bank manager will calculate the total income properly after claiming chapter 6 deductions and after claiming rebate, and after claiming all the deductions properly, he will arrive at net total income. On net total income, he will calculate tax liability. Let's say tax liability is 40,000 rupees. 40,000 rupees will be deducted from specified senior citizen bank account and under section 194P. Whatever 40,000 that is deducted is there, that will be deposited to the government. See, specified senior citizen is paying 40,000 rupees tax. He is not paying directly, but bank manager is deducting 40,000 from his bank account and bank manager is paying. As tax amount of 40,000 is paid in the form of TDS, specified senior citizen is exempted from filing income tax return. Is it clear? Next, 194Q, this will be discussed later along with when I explain TCS under section 206C1H. Along with the TCS under section 206C1H, I will explain TDS under section 194Q. Now, let us discuss 194R. Any benefit received during the course of business or profession. I already told you, perquisites received during the course of business or profession is taxable under the PGBP head under section 28. Do you remember? So if any benefit is received during the course of business or profession, such benefit is taxable under the head PGBP. The person who is giving such benefit, such person is required to deduct TDS. For example, I went to audit, I finished audit. My client paid me audit fees of 1 lakh rupees. Along with 1 lakh rupees, he gifted me an iPhone. Now, why he gave iPhone? Because I provided professional services to him. That means I am getting iPhone, I am getting benefit because of my professional service. Now, this 80,000 rupees iPhone is a gift to me. It is a benefit to me that is received because of my profession. Now, not only 1 lakh rupees audit fees, 80,000 rupees worth of iPhone which is received by me, the benefit that is received by me, that is also taxable to me under the head PGBP. That means in my P&L account 1,80,000 is taxable. 1 lakh audit fees, benefit 80,000 rupees. Are you able to understand? Before he gives that 80,000 rupees benefit to me, he is required to deduct TDS under section 194R. Is it clear? So if the amount of benefit is less than or equal to 20,000 in a financial year, no TDS. If the amount of benefit is more than 20,000 rupees, then TDS is required to be deducted under section 194 or what is the rate of TDS? 10%. Sir, here benefit 80,000 rupees is not given in cash. It is given in the form of iPhone. It is given in the form of kind. So what he has to do? Like he should ask me to pay tax to the government. What I will do? 80,000 into 10%. 8,000 rupees. Who is payer? My client is payer. I am payee. I will deposit 8,000 rupees to income tax department. I will download the challan and I will give this challan to my client. That means payee should release the benefit. Payee should release the perquisite only after tax payment challan is received from payer. So whenever benefit is given in the form of kind, then payee has to ensure that whatever the perquisite is there, on that perquisite tax is duly paid. In this case, he wants to give iPhone to me worth 80,000 rupees. Before he gives iPhone to me, he should ask me to deposit 8,000 rupees to income tax department. Now I will deposit 8,000 rupees to income tax department. I will download challan. I will give this challan to my client. So payee, after receiving income tax challan, after ensuring tax is duly paid on the perquisite, he will give iPhone to me. Are you able to understand? So if perquisite is given in the form of cash, you can deduct TDS straight away. If perquisite is given in the form of kind, payee should release the perquisite only if tax is paid on that perquisite properly. Are you able to understand? When TDS is required to be deducted, time of deduction before providing such perquisite. Sir, if perquisite is given in the form of kind, how do we know its value? Its value is fair value of the benefit or perquisite. If fair value is not available, purchase value, that means at what price my client purchased that iPhone, purchase value you have to take. If purchase value is also not available, price charged to customer. If the same iPhone is sold to outsider, how much price will be charged? That price will be considered as benefit, and on that benefit TDS is required to be deducted. Is it clear? Next, when the payer who is giving the benefit, he is not required to check whether the benefit is taxable to the payee under the head PGBP or not. Are you able to understand? That means the person who is giving the perquisite, the person who is giving the benefit, he is not required to check whether for other person it is taxable under the head PGBP or not. That means whenever perquisite is given and value of perquisite is more than 20,000, it is the duty of the giver or payer who is giving that perquisite. They are mandatorily required to deduct TDS under section 194R at the rate of 10%. Next, YouTube channels are there. Like for example, one Mr. X is there. He is a techie guy. Now, whenever a new phone launches, he do a video on it regarding the new features. Apple wants to launch iPhone 17 in India. Apple, even before launch, has sent iPhone 17 to Mr. X. Mr. X used that iPhone 17 for 1 month and he made a video on it explaining the features of iPhone 17. Now after making video, if iPhone is returned back to Apple, no benefit received by Mr. X. In that case, no TDS is required to be deducted. After making video, iPhone 17 is retained by Mr. X. In such a case, like he is getting free iPhone 17 from Apple. In that case, benefit is received by Mr. X and Apple is required to deduct TDS for Mr. X. So content creators, influencers, like when they receive any product for making video, after making video, if they give back the product, no benefit is received by them. After making the video, if product is not given back, in such a case, whatever the product value is there, that is the benefit received by them, and the person who is giving the product, the company, is mandatorily required to deduct TDS under section 194R. Is it clear? And whenever bonus shares or right shares are issued, in such a case also TDS is not required to be deducted under section 194R. Is it clear? Till now we have seen provisions of TDS. Now let us start discussing provisions of tax collection at source. See, there will be seller, there will also be buyer. Seller, at the time of selling goods, seller will collect money from buyer, right? So seller will collect a taxable value. Along with the taxable value, seller will also collect GST from the buyer, right? Like 100 rupees is the product, 18 rupees is GST. Seller will collect 118 rupees, 100 rupees taxable value, 18 rupees GST from the buyer. Just like how GST is collected, in the same way TCS is also required to be collected. Are you able to understand? So who will collect TCS? Seller will collect TCS. From whom TCS will be collected? From buyer TCS will be collected. So we call seller as collector. We call buyer as collectee. Okay. Just like how GST will be collected from the buyer additionally along with the taxable value. Similarly, along with the taxable value, additionally TCS will also be collected from the buyer or collectee. First, section 206C1. There are list of goods. For these list of goods, TCS is required to be collected by seller from the buyer. Who will collect TCS? Seller. From whom TCS will be collected? TCS will be collected from the buyer. Okay. What is the rate of TCS? Whenever alcoholic liquor for human consumption is sold, along with the taxable value, 1% TCS is required to be collected. Let's say 1 lakh rupees worth of alcohol is sold. Like now, seller from buyer, he has to take 1 lakh. On 1 lakh additionally 1% TCS. That means 1 lakh 1000 will be collected by seller. How much is value of alcoholic liquor for human consumption? 1 lakh. So additionally TCS at the rate of 1% will be collected. How much? 1000. So total 1 lakh 1000 will be collected. Out of 1 lakh 1000, 1 lakh will be recognized as sales, 1000 will be considered as TCS payable to government. Is it clear? So tendu leaves 5%, timber and other forest produce, when they are sold along with the taxable value, additionally 2.5% TCS is required to be collected. On sale of scrap 1%. On sale of minerals, which minerals? Coal, lignite, iron ore. If these minerals are sold along with the taxable value of minerals, additionally TCS is required to be collected at the rate of 1%. Is it clear? So 206C1, what are the products covered? Alcoholic liquor for human consumption, rate of TCS 1%. Tendu leaves, rate of TCS 5%. Timber and other forest produce 2.5%. Next, minerals being coal, lignite, iron ore and scrap. For these two, rate of TCS is 1%. Who will collect TCS? Seller. From whom TCS will be collected? From buyer TCS will be collected. When credit or accrual or cash basis, whichever is earlier. That means date on which a sale entry is passed in books of accounts or date on which amount is received from buyer, whichever is earlier. On that earlier date, TCS will be collected. Next. See here, buyer is there, right? If buyer is a public sector company, central government, state government, embassy, high commission, legation, consulate and trade representation of a foreign state and a club. Simple. Under section 206C1, whatever the goods are there, alcoholic liquor for human consumption, tendu leaves, minerals, scrap, forest produce, timber. If these goods are purchased by public sector company or central government or state government or any foreign embassy or local authority, sorry, local authority is not there, foreign embassy, okay, then if the buyer is central government or state government or public sector company, TCS is not required to be collected under section 206C1. Next, a buyer in retail sale of goods purchased by him for personal consumption. For example, I purchased 10 leaves for my personal consumption, or Mr. A purchased alcoholic liquor for personal consumption. So whenever these goods, these 5 goods, alcoholic liquor for human consumption, 10 leaves, timber, scrap, minerals, whenever these are purchased by retailer for personal consumption, no TCS is required to be collected. That's why many drinkers, when they purchase liquor from retail outlets, their TCS will not be collected. Okay, so like you can see, but whenever manufacturer sells alcoholic liquor for human consumption to distributor or distributor to wholesaler, then TCS will be collected. But when goods are sold to ultimate retailer, TCS provisions will not apply. So very simple, manufacturer to wholesaler, wholesaler to distributor, distributor to retailer, retailer to customer. This is supply chain, right? So whenever goods are sold by manufacturer to wholesaler, section 206C1 provisions are applicable. Whenever goods are sold by wholesaler to distributor, section 206C1 provisions are applicable. Whenever goods are sold by distributor to retailer, section 206C1 provisions are applicable. Whenever goods are sold by retailer to ultimate customer, section 206C1 provisions are not applicable. Is it clear? Another point, TCS is not required if resident buyer furnishes a declaration that goods under section 206C1 are to be utilized for purposes of manufacturing of articles or for purposes of generation of power and not for trading purpose. What do you mean by this? Let's say seller is selling goods to Sun Pharma company. You know Sun Pharma, right? It manufactures medicines. Now Sun Pharma is purchasing alcoholic liquor. Alcoholic liquor for human consumption. Sun Pharma gave declaration. What is declaration? Whatever the alcoholic liquor that is purchased is there. Alcoholic liquor for is used for manufacture of medicines. Under section 206C1, whenever goods are purchased, if buyer gives a declaration, whatever the goods, alcoholic liquor or tender leaves or coal, lignite, iron ore or scrap, if buyer gives a declaration, whatever the goods covered under section 206C1 are purchased are to be utilized for the purpose of manufacturing of a thing, manufacturing of an article, then no TCS will be collected. Once this declaration is given, no TCS will be collected under section 206C1 if PAN number is given by Sun Pharma, if PAN is given by buyer. Are you able to understand? So very simple. Generally under section 206C1 TCS is required to be collected. But if buyer gives declaration, whatever the goods purchased are there, they are to be used exclusively for the manufacturing of an article or thing or for the purpose of production of power, you can see, or for the purpose of generation of power. Let's say electricity manufacturing company is purchasing coal. Why coal is purchased? For the purpose of manufacture of electricity. Coal is a mineral. TCS is required to be collected. Even the TCS is required to be collected if declaration is given coal is purchased exclusively for purpose of generation of power, no TCS will be collected under section 206C1. Is it clear? Next. Seller means who? Here seller means any person other than individual or HUF. Individual or HUF are required to collect TCS under section 206C1 only in preceding financial year if their business turnover is more than 1 crore or in preceding financial year in profession gross receipts are more than 50 lakhs. Very simple. If seller is other than individual and HUF, mandatorily required to collect TCS. If seller is individual or HUF, they are required to collect TCS only in preceding financial year. For such individual or HUF, business turnover is more than 1 crore. Okay, this is all about section 206C1. Next, section 206C1C. Lease or license or contract of parking lot, toll plaza, minor query. Very simple. Whenever parking lot, toll plaza, minor query is given on lease, whatever the name you use, license, lease, contract. So along with that lease value or contract value, additionally TCS is also required to be collected. For example, PVP mall is there in Vijayawada. In PVP mall, basement 2 floors are for parking. One basement is for bike parking, another basement is for car parking. For example, I took that basement car parking on lease. That means basement 2 floors I took on lease. Monthly rent is 5 lakh rupees. Now what I will do, every month to PVP mall owner, I will pay 5 lakh rupees because I am using basement both parkings. I am collecting charges from those visitors of PVP mall. So along with 5 lakh rupees, what is lease value? For park, I took parking lot on lease, right, in PVP mall. For parking lot, what is lease value? Lease value is 5 lakhs. So every month I am required to pay 5 lakhs. Along with 5 lakhs, I am required to also pay TCS at the rate of 2%. 5 lakh into 2%, I think it's 10,000. Let's see. Yeah, 10,000. 5 lakh 10,000 I am required to pay to the PVP mall owner. Are you able to understand? So out of 5 lakh 10,000, 5 lakhs will be recognized as income to him, lease income, and 10,000 will be considered as TCS payable to government. Is it clear? So whenever parking lot or toll plaza, minor query are given either on lease, whatever the name you use, lease, contract, license, along with that contract value or license fees or lease value, additionally TCS is required to be collected at the rate of 2%. Okay, who will collect TCS? Lessor or licensor or contractor. From whom? Lessee, licensee or contractee, other than public company. Very important. When parking lot, toll plaza, minor query are given on lease to a public sector company, then no TCS is required to be collected under section 206C1C. In remaining cases, TCS is required to be collected. When TCS is required to be collected? At the time of entry in books of accounts or at the time of payment, whichever is earlier. That means the date on which that lease value is recognized, and like that particular month's lease income is recognized in books of accounts, or their date on which lease income is actually received. Out of these two dates, whichever is earlier date is there, on that earlier date TCS is required to be collected. Next, sale of motor vehicle. 206C1F. Whenever motor vehicle is sold, my dear students, please remember, value of motor vehicle, if it is less than or equal to 10 lakhs, no TCS will be collected. Here value means before GST. That means taxable value of car before GST. If such taxable value is less than or equal to 10 lakhs, no TCS will be collected in case of sale of motor car. However, if value of motor car is more than 10 lakh rupees, TCS will be collected under section 206C1F at the rate of 1%. Is it clear? Who will collect TCS? Seller will collect TCS. From whom TCS will be collected? From buyer TCS will be collected. Let's say I purchased Honda Elevate car. Let's say taxable value of this car is 14 lakhs. Now, along with 14 lakhs, I am required to also pay TCS at the rate of 1%. How much? 14,000. So, showroom person, that means seller of Honda Elevate car, he will take 14 lakhs. Along with 14 lakhs, he will also collect TCS at the rate of 1%. How much is 1%? 14 lakh, 14,000. So, for seller, in the hands of seller, 14 lakhs will be recognized as sales and 14,000 will be considered as TCS payable to government. Is it clear? Now, many students will get doubt when TCS is required to be collected at the time of receipt of such amount, whenever that sale consideration on sale of motor car is actually received. See here, accrual basis is not applicable. Whenever the amount is received at the time of receipt of such amount, additionally TCS is also required to be collected. Some of the students will get doubt, sir, what if consideration is paid in 5 rupee coins? Even though consideration is paid in 5 rupee coins, still TCS is required to be collected. The moment value of car is more than 10 lakhs, along with the taxable value, additionally TCS is required to be collected. Whether it is luxury car, normal car, that is not relevant. Only thing that is relevant is value of car. Taxable value of car before GST, if it is greater than 10 lakhs, along with the taxable value, additionally TCS will also be collected. Is it clear? Next, it will not apply on sale of motor vehicles by manufacturers to dealers or distributors, applicable only to a retail sale. What do you mean by this? 206C1F. Manufacturer sold cars to distributor. Distributor sold cars to wholesaler. Wholesaler sold cars to retailer. Retailer sold cars to customer. Now, on sale of cars by manufacturer to distributor, whether TCS under section 206C1F is applicable, 206C1F is not applicable. Sale of cars by distributor to wholesaler, 206C1F is not applicable. Wholesaler to retailer, 206C1F is not applicable. Only on retail sale, only on ultimate sale of car by retailer to customer, section 206C1F is applicable. Is it clear? Are you able to understand? Next, whenever cars are sold, even though car value is more than 10 lakhs, if cars are sold to public sector company engaged in the business of carrying passengers or government, embassies, representation of a foreign estate and local authority, for these category of persons, even though car value is more than 10 lakhs, if car is sold to government, if car is sold to embassies, if car is sold to public sector company which is in the business of carriage of passengers, if car is sold to local authorities, then no TCS is required to be collected. Simple. Buyer of car is government, embassies, public sector company engaged in carrying of passengers and local authority. If buyer is any one of these four persons, no TCS is required to be collected. It will not apply on sale of motor vehicles by manufacturer to dealers or distributors. TCS is applicable irrespective of the vehicle, whether it is luxury vehicle or not. TCS applicable is on each TCS is applicable on each sale and not aggregate value of sale made during the year. That means what? For every sale of car to a particular customer, TCS is required to be collected. Whether sale is made through cash or bank, that is not relevant. How mode of transaction is irrelevant. If value of car is more than 10 lakhs, TCS is required to be collected. Is it clear? Next, let us see 206C1G. Sale of overseas tour program package. What do you mean by overseas tour program package? For example, I want to go to Singapore and stay in Singapore for 1 week. In Singapore, I don't know anything. Like, I don't know what are the local places. I don't know which is the good hotel. I don't know what are the locations which are famous in Singapore. So what I do, I will book a tour package. I will go to make my trip. After going to make my trip, I will book tour package like 6 nights 7 days Singapore trip. 80,000 rupees is there. I paid 80,000 rupees. I booked the tour package. He himself will book flight tickets. He will book cab also from airport to hotel in Singapore. He will book hotel. He will appoint a tourist guide to me. He will select the locations. I will go to those locations, and return flight also he will book to me. That means what? Entire tour is given in the form of package. Food will be provided by him, hotels will be provided by him, cab facilities are provided by him, flight tickets will be provided by him. For doing all these activities as a package, lump sum amount he is charging. This amount we call as tour package. So whenever I purchase overseas tour package, then TCS will be collected under section 206C1G. Is it clear? Who will collect TCS? Seller of overseas tour program package. That means Make My Trip will collect TCS, because in Make My Trip I am booking tour package, right? From whom TCS will be collected? Buyer who purchases package except non-resident who is not a permanent establishment in India. That means what? I am not a non-resident, I am a resident in India. So obviously Make My Trip will collect TCS from me when I book overseas tour program package. However, if I am a non-resident and I does not have permanent establishment in India, then Make My Trip will not collect TCS if the buyer of overseas tour program package is non-resident, who is not having PE in India. Very simple. The person who is purchasing tour package, if he is resident, mandatorily TCS will be collected under section 206C1G. Buyer of tour program package is non-resident who is not having PE in India, then TCS will not be collected. Okay. What is the rate of TCS? If the value of tour package is up to 7 lakhs, rate of TCS is 5%. If value of tour package is more than 7 lakhs, rate of TCS is 20%. When TCS will be collected? At the time of entry in books of accounts or the time of receipt of amount, whichever is earlier. Next, 206C1G. Remittance under LRS of RBI through an authorized dealer. Let's say my brother is studying in USA. For my brother, I wanted to send money. So whenever money is sent through liberalized remittance scheme through an authorized dealer, then whatever the amount that is remitted outside India is there, on amount remitted outside India, along with that amount additionally TCS will also be collected. But threshold limit is 7 lakhs. If amount remitted outside India is up to 7 lakh rupees in a financial year, then no TCS will be collected. If amount remitted outside India in a financial year by me is more than 7 lakhs, then TCS will be collected. Who will collect TCS? Who is transferring money? Authorized dealer is transferring money. So he himself will collect TCS. So person remitting such amount, authorized dealer will collect TCS. But if money is transferred outside India by a non-resident who is not having PE in India, then no TCS will be collected. I am a resident in India. If I remit outside India more than 7 lakhs, TCS will be collected by authorized dealer. If I am non-resident, not having permanent establishment in India, even though I transfer more than 7 lakhs, no TCS will be collected by authorized dealer. Are you able to understand? When TCS will be collected? At the time of entry in books or at the time of receipt of amount, whichever is earlier. If I am remitting money outside India for education or medical treatment, then rate of TCS is 5%. If I am remitting money outside India other than for education or medical treatment, rate of TCS is 20%. I took education loan 80 lakh rupees and this 80 lakh rupees is transferred outside India. That means if education loan is taken and funds of education loan are remitted outside India, in such a case 5% not, only 0.5% TCS will be collected. Very easy. Whenever you are remitting money outside India, check if the amount of remittance, all remittances in a financial year, if they are less than 7 lakhs, no TCS will be collected. All remittances in a financial year are more than 7 lakhs, then TCS will be collected. What is the rate of TCS? If amount is remitted for education or medical treatment, rate of TCS is 5%. If amount is remitted other than for education or medical treatment, rate of TCS 20%. If education loan is taken and if education loan amount is remitted outside India for education or medical treatment, rate of TCS is 0.5%. Is it clear? Above section not applicable if buyer is liable to deduct TDS under Income Tax Act. For example, I am remitting money outside India through authorized dealer. As per provisions of Income Tax Act, when I am giving money to authorized dealer, I am required to deduct TDS. When I deducted TDS for money given to authorized dealer, again he will not collect TCS from me. That means TDS, TCS both simultaneously will not apply. If buyer deducts TDS as per provisions of Income Tax Act, then authorized dealer for remitting money outside India, he will not collect TCS. Similarly, when money is sent outside India by central government, state government, embassy, high commission, legation, trade representation of foreign state, local authority, if these category of persons sent money outside India, then TCS will not be collected under section 206C(1)(g). Is it clear? Next. If buyer is non-resident visiting India, no TCS. My friend is there. From last 10 years, he is staying outside India in USA. He came to India. When he came to India, he converted dollars into rupees. When dollars are converted into rupees, or he wants to take money from India, he converted rupees into dollars. So whenever non-resident who is visiting India converts money from rupees to dollars and remits money outside India through authorized dealer, no TCS will be collected. So very simple, whenever money is remitted outside India by a non-resident who is visiting India, no TCS will be collected. Justin Bieber came to India. He performed in a concert, Ambani's wedding. He took, let's say, 10 crore rupees remuneration. 10 crore rupees he remitted outside India. From Indian rupees to dollars, he remitted outside India. No TCS will be collected under section 206C(1)(g). Is it clear? Next. No TCS shall be applicable on expenditure through international credit card. I purchased overseas tour program package through international credit card, or like I made payments through international credit card. Whenever payment is made through international credit card, TCS under section 206C(1)(g) is not applicable. Next, threshold limit of 7 lakhs for LRS is combined threshold. Here there are multiple items, right? Education, medical treatment, other purposes. Sir, whether 7 lakhs is applicable for education separately, medical expenditure separately, other expenses separately? No. 7 lakh rupees threshold limit is for all remittances together. That means whether you send for education, medical treatment, or both education, medical treatment and other purposes, all remittances in a financial year for all purposes together, if it is greater than 7 lakhs, then TCS will be collected. Next, threshold limit of 7 lakhs is applicable for full year. Purchase of only international travel ticket or purchase of only hotel accommodation is not regarded as overseas tour program package. What do you mean by this? My Singapore trip is there, right? First option, I will book tour package in Make My Trip. Second option, I independently purchased flight tickets. I myself booked hotels. I myself booked cabs. I myself ordered food. That means, like, as a package I am not receiving. Every product I am purchasing on my own. In this case, no TCS will be collected under section 206C(1)(g). Only as a tour program package. As a package, if I purchase, then only TCS will be collected under section 206C(1)(g). Is it clear? Let us discuss 206C(1)(h). What section 206C(1)(h) says? There will be seller, there will also be buyer. In case of seller, in preceding financial year, turnover is more than 10 crores. In this case, whenever seller sells goods more than 50 lakhs to buyer, then TCS is required to be collected. Let's say taxable value of goods sold is 70 lakhs. Along with 70 lakhs, TCS at the rate of 0.1% in excess of 50 lakhs. In excess of 50 lakhs, how much? 70 lakhs minus 50 lakhs into 0.1%. How much it will be? That means 20 lakhs into 0.1%. 2000 rupees. So total 70 lakh 2000 rupees will be collected. Out of 70 lakh 2000, 70 lakhs will be recognized as sales and 2000 will be recognized as TCS payable to government. Are you able to understand? So as per section 206C(1)(h), in case of seller, in preceding financial year, if turnover is more than 10 crores and the same seller is selling goods worth more than 50 lakhs to buyer, along with the taxable value, seller is additionally required to collect TCS at the rate of 0.1%. This TCS is to be collected on amount in excess of 50 lakhs. Is it clear? In this case, 0.1% is collected if PAN is given by buyer. If PAN is given by buyer. If buyer do not give PAN, then 1% TCS will be collected. Are you able to understand? So if buyer gives PAN, 0.1% TCS in excess of 50 lakhs will be collected. Buyer do not give PAN, 1% TCS in excess of 50 lakhs will be collected. Are you able to understand? This is all about section 206C 1H. Same opposite is 194Q. Opposite of section 206C 1H. What? There is seller, there is buyer. In case of buyer, in preceding financial year, turnover is more than 10 crores. And buyer is buying goods more than 50 lakhs from seller. Let's say taxable value of goods is 80 lakhs. Now buyer is required to deduct TDS, less TDS at the rate of 0.1% in excess of 50 lakhs. How much? 80 lakhs minus 50 lakhs into 0.1%. 30 lakhs into 0.1%. I think it's 3000, right? 3000 TDS will be deducted, and balance how much? 3000 minus 80 lakhs. 79 lakh 97,000. This amount will be paid to seller. And this will be TDS payable to government. 3000 is. What is the rate of TDS? Rate of TDS is 0.1%. Rate of TDS is 0.1%. This 0.1% is applicable if PAN is given. If PAN is not given, TCS rate is 5%. Sorry, TDS rate is 5%. For example, if PAN is not given, in place of 0.1%, 5% TDS will be deducted. 5% means what? 80 lakhs minus 50 lakhs. 30 lakhs into 5%. 1,50,000 TDS will be deducted from 80 lakhs. That means how much is balance? 78.5 lakhs will be paid to seller. Are you able to understand? So TCS under section 206C1H. PAN number given 0.1%. PAN number not given 1%. TDS under section 194Q. PAN number given 0.1% TDS will be deducted. Seller do not give PAN, 5% TDS will be deducted. Now you will get doubt. Sir, there is seller, there is also buyer. In case of seller, in preceding financial year, turnover is more than 10 crores. In case of buyer also, in preceding financial year, turnover is more than 10 crores. Now seller will tell he is required to collect TCS under section 206C1H. Buyer will tell he is required to deduct TDS under section 194Q. That means whenever 206C1H and 194Q both are applicable, both are contradicting. In this case, TCS under section 206C1H is not applicable and TDS under section 194Q is applicable. Are you able to understand? So this is all about 206C1H and TDS under section 194Q. Another point, who is seller? Seller means whose turnover from the business carried on by him is more than 10 crores in preceding financial year. Exception. See, whenever goods are sold to central government, state government, embassy, high commission, legation, trade representation of foreign state, local authority, person importing goods into India, like if buyer is any of these persons, then TCS under section 206C1H is not applicable. Are you able to understand? If buyer is liable to deduct TDS, then TCS is not applicable. I told you TCS under section 206C1H and TDS under section 194Q both are contradicting. In this case, TDS under section 194Q is applicable. TCS under section 206C1H is not applicable. Next, see, whenever goods are sold, ultimate amount, whatever the amount is there, invoice value including GST, you should not reduce GST. You can see no adjustment for sale return or discount or GST is required to be made since collection is made with reference to receipt of amount of sale consideration. So whatever the sale consideration amount that is to be received is there, on that amount, if that amount is greater than 50 lakhs, then TCS is required to be collected or TDS is required to be deducted. Is it clear? Next, I will give due dates. Due dates for TDS and TCS payment. TDS, TCS. April to February, whatever the TDS there, every month is there, the TDS amount should be deposited on or before 7th of next month. What is due date? On or before 7th of next month. Let's say TDS deducted in the month of April, that should be deposited on or before 7th May. TDS deducted in the month of August, that should be deposited on or before 7th September. TDS deducted in the month of February, that should be deposited on or before 7th March. Okay, March month, if TDS is deducted in the month of March, TDS is to be deposited on or before on or before 30th April of next financial year. On or before 30th April of next financial year. For example, TDS for March 2024, it should be deposited next financial year means 24-25. It is to be deposited on or before 30th April 2024. Is it clear? If TDS is deducted in the month of March 2025, that should be deposited on or before 30th April 2025. Are you able to understand? So only for last month relaxation is there. For remaining all months, TDS is to be deposited before 7th of next month. Only in the month of March, if TDS is deducted, that should be deposited before 30th April of next financial year. Is it clear? Next, TCS. On or before TDS to be deposited, TCS to be deposited. TCS to be deposited on or before 7th of next month. Even if TCS is collected in the month of March also, the TCS is to be deposited on or before 7th of next month. That means what? For TCS, only one due date. Any month, TCS collected is required to be deposited on or before 7th of next month. For TDS, two due dates are there. April to February, whatever TDS that is deducted is there, that should be deposited before 7th of next month. March month, whatever TDS deducted is there, that should be deposited before 30th April of next financial year. Is it clear? Good. Next, return. TDS and TCS return due dates. That means when TDS return is required to be filed, when TCS return is required to be filed. There are 4 quarters, right? Q1, Q2, Q3, Q4. TDS due date. What is Q1? Q1 ranges from April to June, right? So for April to June quarter, TDS return is required to be filed. TDS return due date by 15th July. That means after end of the quarter, within next 15 days, return is required to be filed. I am sorry, not 15th July, 31st July. From end of the quarter, within next 1 month, TDS return is required to be filed. Second quarter, July to August, right? 30th September. Sorry, July to September, right? Due date is 31st October. Q3 is October to December, right? Due date is 31st January. Q4 is January to March, right? Due date is 30th May of next financial year. 30th May of next financial year. TCS return due dates. For Q1, 15th July. For Q2, 15th October. For Q3, 15th January. For Q4, 15th May of next financial year. Okay, these are the TDS and TCS return due dates. My dear students, listen this topic, very much important, yet many people will ignore. Interest on late deduction and late payment of TDS. I will take one example and explain this concept, you will understand. Okay, so listen. On 7th July 2024, audit fees paid to me. Audit fees paid 80,000 rupees. When audit fees is more than 30,000, professional fees, TDS is required to be deducted, right? TDS not deducted. TDS not deducted. When TDS was deducted? On 8th August 2024, paid another 30,000 to me. On this 30,000, TDS at the rate of 10% on 1,10,000. Okay, that means 80,000 plus 30,000, total 1,10,000. How much? 11,000 TDS was deducted. When it was paid, TDS paid on 10th January 2025. This is the scenario. Whenever audit fees is paid, under section 194G, when TDS is required to be deducted at the time of entry or at the time of payment, whichever is earlier. So TDS is required to be deducted on 7th July 2024. But whether TDS was deducted? No, TDS was not deducted. When TDS was deducted on 80,000, on 80,000 TDS was deducted on 8th August 2024. So the month in which TDS is required to be deducted, when TDS is required to be deducted? In the month of July. To when TDS was actually deducted. When TDS was actually deducted? In August, TDS was actually deducted. So for a period of 2 months, interest will be calculated. Interest is equal to, how much is TDS amount? TDS is equal to 80,000 into 10%, 8,000, right? 8,000 into 1% into 2 months. So for late deduction of TDS, rate of interest is 1%. 8,000 into 1% into 2 months, how much? 160 rupees. Next, when TDS deducted is actually paid, actually if TDS is deducted on 8th August, it should be paid before 7th September, right? But whether it is paid before due date, it was not paid before due date. When it was paid in the month of January 2025. So when TDS was deducted in August. So the date on which TDS was actually deducted up to the date on which TDS was actually paid. How many months are there? August, September, October, November, December, January. 6 months are there. For these 6 months, interest will be calculated at the rate of 1.5%. How much is TDS amount? 11,000, right? 11,000 into 1.5% into 6 months. How much? 990 rupees. Very simple. TDS not deducted. The month in which TDS is required to be deducted. From that month to month in which TDS was actually deducted. For this period, 1% interest will be levied. TDS deducted but not paid to the government. It is bigger default, so higher rate of interest. So the date on which TDS was actually deducted up to the date when TDS was actually paid to government. In between these two dates, whatever the months are there, for every month 1.5% interest is required to be paid. Is it clear? So that provision is there over here. You can see provision here. Delay in deduction 1% from date on which TDS was deductible to date on which TDS was actually deducted. Delay in deposit 1.5%, date on which TDS was actually deducted till the date on which TDS was actually paid. Is it clear? So this is the scenario. Remember, delay in deduction 1% interest, late deposit 1.5% interest. Is it clear?